first online. I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was
what we do for one another, but it's just responsible world leadership, and you're a major world leader.
Well, for more, Derek Wellbank, our senior editor in Singapore, joins us now. Always great to speak to you, Derek, especially face-to-face and in Singapore. Finally, we're reunited. It was interesting to see, first of all, President Xi definitely asking for a rational U.S. policy from, President Biden, and then President Biden talking about trade with China.
Well, Francine, first off, Singapore is the center of it all right now, and I'm absolutely thrilled that you've come to me to talk about it here. And look, this meeting was really, really important. It went over by about 30 minutes. It went a little longer than people expected. And when you're talking about China and the U.S., you're really looking for signals like that, because the readouts can be bland and written in international relations speak that maybe doesn't mean anything, or maybe it does, but you're looking for those concrete symbols, and that was one there. I think that the real concern on the American side is to make sure that competition doesn't become conflict, Joe Biden said. And that's really critical, especially in a space of USA-China, where sometimes the sides speak past each other, and they have big symbolic things that are going on with naval passages and air flights and things like that, where tinderboxes can get lit, and you don't want that to happen accidentally. And so I think even sitting down at the table is a positive sign. The talks going longer is a positive sign. No, they did not reframe the entire relationship in this meeting, but they were never going to. The critical thing here is to get people on the same page.
Derek, what was the readout from the Chinese side? How have they been spinning this summit?
Well, the Chinese got out first here, Tom, which I actually was really intrigued to see. They got out a little bit before the Americans. They were able to set a little bit of the tone. There was some initial confusion about just what Joe Biden had talked about vis-a-vis Taiwan, but it appears that there's no real difference in the U.S. strategy vis-a-vis Taiwan, so no real change there. Overall, the conversation was fairly similar in the readouts, I would think. There wasn't a giant stark difference. The Chinese side did come out and say, though, a couple of times that it was important to see where the Americans did what they did going forward to really put some meat on the bones of this discussion.
Derek, there was a bit of cooperation actually on the climate change front in Glasgow. Was that the beginning of smoother things, or is it, if everything else goes well, then they'll cooperate on climate?
Well, I use the word green shoots in this relationship for a reason, and climate change is one that you and I have talked about for a long time as a possible area of cooperation between these two sides, because it's something they fundamentally agree on, right? They both are fundamentally agreed on the idea that someone needs to do something about climate change. These are the two biggest actors in the world, and so they're the natural places to do. So I do think that that was a real big potential area of cooperation that we did see start to be realized. Another one that I would signal is actually on Boeing. The 737 MAX recertification, that's one I know Boeing is watching for this. I think traders are too, but that's something I'm really keeping my eye on. If you're looking for small things, that's one in maybe the next days, weeks, that you could start to see movement on, signaling we're going in maybe the right direction.
Okay, Derek Wellbank, our senior editor in Singapore, on the outcomes of that important summit, the first one between Presidents Xi Jinping and Joe Biden, even if it was virtual, and the fact that it ran over time. Let's bring back Eddie van der Veld then from our L&I team for the market reaction for this. We've seen a strengthening of the yuan. That was one of the first assets to move on the back of this meeting. Does it change fundamentally the direction of markets for China or globally? Does it remove some of those tailwind risks around geopolitics?
I think it does soften some of the risks, right? And I think it just underlines how the Biden era is different from the Trump era before it, which was very adversarial. And we did have talks, but they were always adversarial, and when we just never knew what was going to come out of them. we're in an era of a little bit more predictable foreign policy from the US, and I think that definitely is a good thing, and I think markets will react to that. I think, you know, there are definitely still problems between the US and China that will take many years to sort out, and that will continue to play out in markets. But I suppose we are expecting less volatility on that front.
Eddie, thank you so much. Eddie van der Vaart there from our MLive team. I urge everyone to go and check out his and his colleagues' fantastic blog. Now, coming up, cryptocurrencies under pressure. We'll look at what's driving digital tokens lower next. This is Bloomberg.
the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the quarter three was the quarter that was most affected.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now. Into weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
Welcome back to the Open. We are 16 minutes into the European trading day. Building on those record gains is what we're seeing in the European markets. There's modest gains of 0.2%, but still at these very elevated levels. The close in the US was mixed to lower. The futures in the US are pointing flat. In terms of how it breaks down on sector-by-sector basis, telecoms at the top of the list here in Europe. At the bottom, personal care, followed by construction and materials. The UK and jobs numbers in focus, and the repricing potentially of rate hikes and the rate hike cycle for the BOE as we look ahead to December. Okay, let's get the Bloomberg business flash now with Laura Wright. Laura.
Thanks, Tom. Elon Musk has exercised options and sold more Tesla shares. The world's richest person offloaded about $930 million of stock. It adds to the $6.9 billion he sold last week, which sent the company's share price plunging. Meanwhile, JP Morgan has sued Tesla for $162 million. That's for warrants that have expired above their strike price. Tesla and JP Morgan are disputing adjustments made to the contract in the wake of Elon Musk's threats to take the company private. Big short investor Michael Burry has ditched some of his biggest bearish bets. A regulatory filing shows his firm closed positions against ARK, Tesla, and the largest treasuries ETF in the third quarter. Burry has also deleted his Twitter account after arguing with Elon Musk in recent days. The CEO of Scion Asset Management rose to fame with his successful bets against mortgage securities during the financial crisis. Saudi Arabia's sovereign wealth fund has waded deeper into the US stock market. It made 19 new investments in US-traded companies in the third quarter, adding stakes in e-commerce, clean energy, and transportation. That's according to a regulatory filing with the SEC. That's the Bloomberg Business Flash. Tom.
Laura, thank you so much. I'm going to actually pick it up here in Singapore. Now, cryptocurrency is under some pressure today. Bitcoin has been sliding towards the $60,000 level, and Ether touched one of its lowest levels this month. Well, let's get straight to Bloomberg's Joanna Ossinger covering crypto in Asia. She joins us now. Joanna, thank you for joining us. There's quite a lot of I don't know whether it's a drop or actually a pause in the rally, and what's behind it?
Hey, Francine. So it's a few things, one of which is that we had the infrastructure bill signed. And of course, there are some crypto taxation provisions in there that are making people nervous. So there was some trading around that kind of left the market a little bit fragile. And then China has come out and warned people, especially state-owned enterprises, about crypto mining operations and that it might boost power prices. So that's another thing that, a lot of crypto operations have left China, but it still can make the market pretty nervous. So we've had a couple things that have contributed to those drops today.
Given the institutional pickup and buy-in to the crypto space, can investors kind of look through some of these short-term concerns?
Tom, they probably can to an extent, but of course, crypto is so volatile, right? You could have another huge drop from here, and when you have drops, you tend to have very big drops. So it's always hard to tell, but it's still the case that Ether is up 6 times this year. Bitcoin has about doubled. So it's been a very good year for crypto, even if it's off of the highs that people were looking at earlier in the past few weeks.
Joanna, what's the near-term outlook for crypto prices? I mean, I know there's also a crypto exchange, Coinbase, that was subpoenaed, and I know that's quite different. But first on the prices and then to the subpoena.
Yeah, so of course, there are a lot of people in crypto who are saying that it's going to 100,000 by the end of the year. That's the big refrain, and the fourth quarter does tend to be pretty good for crypto. Of course, Bitcoin has been stuck in this range of maybe the low 60,000s. So this is going back to the bottom of that range. We'll see if it goes below 60,000, you could start to see even more concern. But the bulls are still there with that 100,000 number. And yeah, Coinbase talking about an SEC, the SEC inquiring about things. I mean, the SEC is looking more and more at the crypto companies, but regulators around the world are doing that. Crypto is just becoming a bigger deal. It's becoming more important, and regulators are going to take a look at, what they see as something that might have some uses, but can also be a real problem for retail investors when you have, say, the frauds and issues in the market. So, it's not too surprising that the SEC is active in some of these places.
Yeah, regulators from China to the US looking at this space. Bloomberg's Joanna Ossinger. Currently, Bitcoin is trading at 60,880, down 4.7%. Coming up, Saudi Arabia, Russia, and the UAE signal OPEC Plus will continue raising oil output cautiously. We return to ADIPEC in Abu Dhabi next. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
Get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
What is the difference between phase out and phase down? I don't know. But you know, for a large number of countries, which during the process of the transition, will have to rely on whatever means of energy that they have. I mean, if suddenly somebody could enhance their, the availability of petrol, diesel, gas in the market, people would not have to use that. But it's not India alone. I mean, India is one of the countries. Now, very often what happens, it's also a very convenient play to take the focus off oil and gas and to suddenly talk about coal as if that were the main issue of discussion here. So as I said, there's a little play around here and, whatever that language is, where it came from, etc. I mean, a large number of countries which will, in the short run, have to make sure that their citizens are supplied with electricity.
India's Energy Minister Hardeep Singh Puri there at the ADIPEC in Abu Dhabi, speaking exclusively to our Bloomberg anchor Youssef Gamal-Eldin a little bit earlier. Now return to ADIPEC, where Youssef is still there following all of the developments. Youssef, great to speak to you. So India, a huge consumer of oil, getting squeezed by prices. How does the Energy Minister actually plan to address this issue?
Yeah, he's quite the character, and he made some very, very strong comments around what he thinks are unsustainable levels of energy prices. The country has had to cut taxes to try and offset the impact on Indian consumers, trying to keep oil and gas affordable to more than 1 billion people. It's not an easy task, and now you have the energy transition to consider on top of that as well. He's had a lot of bilaterals with oil producers here at ADIPEC in Abu Dhabi, and he said he made a strong impression that more needs to be done on that front. The other speculation was that we might get something on a strategic reserves release beyond the United States, other big consumers, and he said, you know what, that's only in emergencies, not at the moment.
Youssef, what else have you been hearing about that debate that is underway in Washington around the strategic reserves?
I mean, everybody's got a view on this, and it's quite a spectrum of opinions. The latest we had was from Dan Yergin from IHS Global Market, and he made the point that, look, even if the U.S. blocked exports, it would actually not have a meaningful impact on what happens with gasoline prices. In the United States, at 7-year highs. Strategic reserves still, though, will play an important role as we get closer to Thanksgiving. This is politically a hot potato now, and this administration will need maybe to move into public opinion. Back to you.
Okay. Bloomberg's Youssef Gamal-Eldin, great stuff on the ground for us at ADIPEC. Coming up, Russia looks to get back on track with international deliveries of its Sputnik COVID vaccine. We're going to find out more about that. Stay with us. This is Bloomberg.
introduced products made by Meta. Which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open. We are 30 minutes into the European trading day, and here are your top stories. Biden and Xi cool down hostilities. The two leaders call for cooperation in a longer than expected summit. Andrew Bailey feels uneasy about inflation. Evidence mounts that a shortage of workers will drive up British wages. The pound gains after UK unemployment falls. And JP Morgan sues Tesla over a $160 million payment as Elon Musk dumps more stock in the electric car maker. Francine, that debate about inflation with ex-Fed officials is very much heating up. Pressure on the Fed to speed up its taper. Here in Europe, it seems like equities are just continuing to grind higher, still at record levels, and the geopolitics, you are in the region most affected by the dynamics between the US and China. In Singapore for the Bloomberg New Economy Forum. How are things looking, Francine?
Yeah, hi, Tom. Things are looking pretty good, actually, for the moment. So you're right. The focus is firmly on President Xi of China and President Biden of the U.S. and that summit that could lead to a better working relationship. Now, there was nothing huge about it. There was nothing new, but certainly they spoke. The body language was good. It also lasted 30 minutes more than expected. And so it's giving a nice little lift to some of these European stocks. That's on the back of gains, actually, that we saw in Asia. Now, the focus firmly, of course, is on what we're seeing with inflation. We had a conversation with Bill Dudley, formerly of the New York Fed. And, of course, markets continue to try and figure out this risk that policymakers are airing by treating this elevated price possibly with some kind of monetary policy adjustment. You can see the DAX remains elevated, the CAC 47,141. The FTSE, look, the FTSE is pretty much flat, but we actually had some encouraging jobs numbers. I'm reading quite a lot of analyst forecasts or economists saying that now rate hike is back on the table for December. The picture overall is not only on inflation, but of course some of the other things that we're watching, including cryptocurrencies. Now, this is what the groups are looking at. Always great to look at the groups because it gives you an idea of where we're seeing the most discounts or not. Telecoms, energy, auto parts in Europe gaining between 0.8 and 1%. You can see healthcare, construction, chemicals a little bit on the downside. I'm really focused on energy with our Youssef Gameldine also at Adipac talking about Brent and WTI.
Okay, let's switch focus to the question of COVID, which remains, of course, a risk for these markets. Russia's COVID-19 vaccine, Sputnik 5, has been plagued by delays in international deliveries in recent months. Our next guest heads the Russian Direct Investment Fund. That is the organization responsible for marketing the vaccine abroad. CEO Kirill Dmitriev joins us now. Kirill, thank you for your time. Can you give us an update then on production volumes of Sputnik and your goals for exports over the next 6 to 12 months?
Sure. So first of all of the production delays have been fully resolved. So we are completely on schedule with all of the countries. And you know, Sputnik is already registered in 71 countries with a population of 4 billion people. And it's very important that Russia is making a very big contribution. So we look at 15% of middle-income people outside of Russia, US, Europe, and China who actually received Sputnik V vaccine. For the first time, we released those numbers. So we provided Sputnik V vaccine to more than 100 million people outside of Russia. That compares to 100 million people provided by Moderna to middle-income countries outside of the US and Europe, to 200 million by Sinopharm outside of China, and to 350 million by Pfizer outside of US and Europe. So we're around 15% of a contribution. We're completely on schedule to deliver vaccines, and we expect to be in the 15-20% market share for middle-income countries going forward.
Mr. Dmitriev, good morning also from Singapore. It's actually afternoon here. How do you explain the disconnect with what Russia is saying on how many doses have been delivered to countries outside, of course, your domestic market, and the likes of Venezuela, Argentina, Philippines, Iran, Turkey, Mexico actually saying that there have been significant delays for the second dose?
Well, it's very easy. Those delays have been resolved 3 months ago. And it's actual media trying to percolate those ideas, but you know, it's very official, it's very clear. There is 0 delays with second component delivery as of 2 months ago. So this is an old story. The new story, for example, today is Sputnik Light is adopted as universal booster in Philippines, which is very important because Sputnik Light in Argentina studies showed that it can increase efficacy and antibodies and T cells of other vaccines by up to 10 times. So you have Philippines officially saying that Sputnik can be a booster to Pfizer, to Moderna, to other vaccines. And this is where we are going to go forward with Sputnik V, our main vaccine, with Sputnik Light, which is a universal vaccine and a booster. And we need to be very clear on some of the media messaging, because some people talk about, you know, big cases in Russia. In reality, you know, Germany has more COVID cases now than Russia, while having half of the Russian population. So the real story is Russia is using Sputnik very successfully, and many countries like Argentina use Sputnik to decrease COVID infections 35 times in the last 4 months. And this is a unique contribution that Sputnik is making.
Why do you think the World Health Organization has yet to give Sputnik its approval? Is this a failure of the process, the application process from the Russian side, or is there something else going on?
Well, no, we're in great dialogue with WHO. Ministry of Health is responsible for this process. We expect the approval by the end of the year, and we are just going through some bureaucratic procedures. But I think it's very important that nobody doubts the safety and efficacy of the Russian vaccine. It's shown in real-world data in more than 70 nations. So once again, you saw lots of attacks on Sputnik in the beginning. Now even our biggest doubters say, we know Sputnik is efficient, we know Sputnik is safe. We see Argentinian, UAE, Bahrain data on the great efficacy of Sputnik, and we will go through the bureaucratic procedures with WHO by the end of the year. So it's a very temporary bureaucratic issue that will be resolved very shortly.
How do you explain the persistently low vaccination record? A lot of people are hesitant about getting the vaccine in Russia, and would you support a mandatory vaccine?
Well, you're right, and I think we need to increase vaccination rates. They actually have been increasing, so we are already almost 50%, getting to 50% mark, which is still lower than many countries. So I think it's very important. What we are doing is to share successful examples of Sputnik use inside and outside of Russia, and really working together jointly with media and with other vaccine manufacturers to have combos of vaccines and really share positive information that, of course, vaccines save lives. And there is no question that vaccines are really a fundamental solution to COVID. And we see great successes of other vaccine manufacturers. And we work with AstraZeneca, with many others, on joint efforts.
Kirill, there's a geopolitical element and level, a link at least, to the global vaccine program. There's also the geopolitics of Belarus and the crisis on the Belarusian and Polish border. To what extent are your contacts within the Kremlin giving you a sense of where things stand? What would Moscow need to see to rein in Lukashenko of Belarus?
Well, let me please stick closer to vaccines, because we're an investment fund. You know, we invested in COVID tests, and COVID, by the way, great drug. that reduces infections dramatically and helps people recover quickly. And vaccine, we stay away from politics. I think many people try to even make vaccine political, but we always said vaccine should not be political. We should have portfolio of vaccines. We will work with other countries. So I will not comment on any of the political issues, and thank you for understanding.
Okay, but on the political side of the vaccine, you haven't recognized any foreign vaccines. Are you politicizing COVID and the vaccines?
Well, actually, they need to apply for a registration permission in Russia. So far, only 2 vaccines applied, AstraZeneca and CanSino. We are working very well with both of them. And I think, they just need to apply, and we are for vaccine combos. We believe that vaccine combination is the way forward. Sputnik was the first vaccine combo in the world. We started the first combo trials with other vaccines. So we are really for vaccine partnership, and we believe that vaccine combos now people start to recognize produce better immune response, longer immune response. So we believe vaccine combos is a way of the future, and Sputnik will be one of the key universal booster to work with other vaccines.
All right, Mr. Dmitriev, thank you so much. We'll talk a little bit more maybe about politics next time you come on. He's the Russian Direct Investment Fund Chief Executive Officer, Kirill Dmitriev. Now, coming up, UK payrolls rise after the end of the government's pandemic furlough program. So we take a look at the numbers, what it means for sterling, and what it means for the Bank of England next. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone. Have a great evening. So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Welcome back to the Open. We are 42 minutes into the European trading day. Some modest optimism building on these record gains in Europe, gains of more than 0.1%. You still have that support from the ECB, Christine Lagarde, at least saying that monetary policy will remain supportive at least through 2022. And then, of course, you have to factor in the higher COVID infection rates here in Europe. But the inflationary pressures arguably less acute within the Eurozone versus what you're seeing in the US. Fran, you are in Singapore for the New Economy Forum. You flew over from London. What was that whole process like when you landed in Singapore, a city-state that had gone for zero COVID policy and then has walked that back and is now opening up its borders?
Well, it's definitely very different to what London is. I have to say, you walk in the street, this is the main city centre where you have a lot of, office blocks, and everyone's wearing a mask even outside. It's very closely monitored. You still have to check in everywhere. You have to show some of your vaccination status in places. There's very little cash that, of course, exchanges hands because everything is done online. The process was pretty smooth, Tom, but of course, this is one of the first outside organizations, the Bloomberg New Economy Forum, gathering the city. So all security measures in terms of safety and COVID have been taken to make sure that there's a smooth process for the delegates. I'm quite excited about the summit itself. It starts off tomorrow. Of course, we'll talk about foreign policy with Henry Kissinger. I'm excited about, I'm doing two panels. One is with the founder of DeepMind, that's now owned by Alphabet, a conversation on AI, but also some of the new things that they're doing to, of course, break down protein to make it into an AI drug that could revolutionize the future of some of medicine. And then David Solomon, I'll be in conversation with him for about 25 minutes tomorrow. He's, of course, Goldman Sachs chairman and CEO. Now, let's get straight to the Bloomberg. First word news here in London is Laura Wright. Hi, Laura.
President Biden and Xi Jinping have highlighted the need for cooperation in their first face-to-face virtual summit. The video conference lasted more than 3 hours, covering topics from trade to the status of Taiwan. A White House official described the tone as open and respectful. According to China's CCTV, Xi said the two countries should not engage in winners and losers. The EU may ease restrictions on state aid for the semiconductor industry. The European Commission could agree to a new policy when it meets on Wednesday. A draft of the policy paper, seen by Bloomberg, considers letting governments subsidize chip plants on the continent. The French have called for more intervention to overcome the global supply crisis. Boris Johnson has said it would be perfectly legitimate to suspend parts of the Brexit deal with the EU. The UK is demanding a major overhaul of the divorce agreement due to the impact on Northern Ireland. Suspending the deal carries the risk of severe retaliation from the EU, but the Prime Minister also said his government still wants to negotiate a solution to the escalating trade dispute. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Laura, thank you very much indeed. OK, the UK jobs market tightened in October, bringing 160,000 more people into employment and absorbing workers who were on the government's furlough programme during the pandemic. It has given a lift to the pound this morning, which may be playing into some underperformance for UK equities so far in early trading. Joining us is Janus Henderson's Investors Portfolio Manager of UK Equities, Indriati Van Hien. Indriati, thank you for joining us this morning. Are you and the team starting to price in a hike in December then on the back of this jobs data?
Yes, I think the whole market is expecting UK base rates to rise over the next year. Obviously, we were wrong-footed last month. But that is very much being priced, and you're seeing big overreactions in large sectors, such as house builders, into that. I think that what the market really needs now is for us to start on that steady diet of rate hikes. You know, it wasn't too long ago, March 2020, where UK base rates were 75 bips, 10 bips today. You know, we can stomach that. They just need to see it happen.
Yeah, can they actually afford to go before the Fed? This was one of the questions of why the Bank of England backed down after talking the market up last time around.
I think many people want to go. I think many countries want to get ahead of the Fed just to protect their own currencies. What you have seen is the market starting to bet against the pound, down at cable down at 1.34, and that's really hurting some UK domestic stocks. And you're starting to see that, like we saw after Brexit. Elastic being stretched between the UK listed overseas earners and domestic earners.
Indriati, you've been talking about the derating of some companies that benefited during the pandemic here in the UK, but now some analysts, some investors derating those as we look to this full reopening here in the UK. You think there may be an opportunity around that. Can you flesh that out for us?
Yeah, sure. So you see a lot of sectors having done well and produced some very strong upgrades in 2021 as we've come out of the pandemic. So I can point to the UK RMI sector. I can point to companies like Grafton, DFS, Wix. These are companies that have really benefited from increased spending and increased savings rates. And what you've seen is those earnings upgrades not be rewarded with re-ratings, as everybody is worrying about what is then going to happen to earnings momentum in 2022. And these companies in particular that are UK domestic are trading at sort of double discounts. So UK cheap versus developed markets, and within that UK domestics even cheaper. So we see continually strong earnings momentum that isn't being rewarded at the moment. So we are actually adding to those parts of the market. Trading normalization is something that investors are worried about. Big COVID winners or big initial post-COVID winners not trading very well as investors wait and see what the economy looks like post-furlough, post-government support, and post that increase in rate hikes and things returning to normal. We think that, again, what I was saying before, interest rates were much higher than they currently are. Everybody's market seems to be acting irrationally for the time being about those rate hikes, and we think that opportunity has presented itself as we move into that normalized territory in 2022.
Indriati, what's your take on Brexit? And could you see an environment where actually rates go up because of some of the inflationary pressures, but at the same time we have much harder and harsher words from the EU that actually translate into an economic shock for the UK?
I think that, the impact of Brexit and the slower, longer term growth and what that means for the UK economy has largely been priced. It was priced in 2016. What we're seeing now is actually the UK, because it had one of the worst COVID experiences, actually see a higher GDP growth forecast for the next few years, and Brexit impacts already being priced there. You're seeing some very big headlines around fishing, around Ireland, but really the impact on the UK economy will be limited, and that has already been priced. It's just sentiment towards what is now seen as a very much isolated island nation. But in terms of UK earnings momentum, we're still a very international index. It's still very insulated from that big headline risk, earnings momentum, that is.
Okay, Indriati van Gien, thank you very much indeed from Janus Henderson on the headline risk around Brexit, how you can look through that, and the opportunities as well amid some of these derated companies in the UK. Coming up, JP Morgan sues Tesla. The US bank goes to court over a $162 million payment, and Elon Musk dumps more stock in the electric car maker. More on that next. This is Bloomberg.
than 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, so we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 53 minutes into the European trading day, building on these record levels in European equities. Gains of almost 0.2%, but you're lower in the UK and you're lower over in Spain. Gains the rest of the major benchmarks. In terms of the sectors, telecoms at the top of the list, personal care and utilities near the bottom. Okay, let's get back to all things Elon Musk and Tesla. Elon Musk selling more shares in that company. Filings revealed that Musk offloaded about $930 million worth of Tesla yesterday. That adds to the $6.9 billion he already sold last week. Joining us now is Bloomberg Daybreak anchor Danny Berger. Danny, how close then is Musk to selling that 10% that he promised in that Twitter poll?
He definitely has a long way to go. So in total, he needs to sell about 17 million shares. He's sold about 7.3 million so far. So it's more than half he has left to go if he indeed is going to get up to 10%. A lot has been made of that, about the timing of the poll. Had he already planned to sell some of these? It does appear that this sale, which he did through exercising options and then selling those shares, he had prearranged some of this. He talked about it back in September, saying he had a big bulk of options that were expiring. He wanted to exercise them. There were taxes he needed to pay. So it does appear that this sale is part of that. We've seen Tesla shares fall about 17% since the selling started at the start of last week. This is what the aftermarket looked like for Tesla. This doesn't include the most recent sale because that happened when post-market trading had already closed. Of course, pre-market opens up in about 10 minutes or so, so we should get a new read on Tesla.
Danny, a new legal complaint was also filed against Tesla yesterday, and this is JP Morgan suing Tesla over unpaid warrants. What exactly is the dispute? Because the amount is quite minimal.
Yeah, it is really minimal, and I think that's important to remember. $162 million here. For a $1 trillion company and a mega bank, it's a trivial amount. So this is potentially a relationship that's becoming fraught over what is a small amount. And in some ways, it's this tweet from Elon Musk, this infamous tweet, coming back to bite him, the funding secured, taking Tesla private. At the time, there were warrants that JP Morgan had issued to Tesla that if Tesla closed above a certain strike price, then Tesla would owe JP Morgan money. But Elon Musk tweets this, and JP Morgan says, okay, this constitutes a significant corporate event. Therefore, we can lower that strike price. In other words, it makes it more likely that Tesla will have to pay them. Tesla took issue with this, saying that this wasn't a valid thing for them to do. JP Morgan, for their part, they issue in their complaint filed yesterday with the Manhattan Federal District Court, saying that not only were they appropriate and contractually required to do this, but Tesla shares would have closed above not just the new strike price, but the original one as well. So a very testy complaint, something we haven't heard yet from Tesla what their response to. But again, Francine, that's very important what you're emphasizing there. This is a small amount of money and potentially burning a bridge between the two.
Danny, thank you so much. Our Bloomberg Daybreak anchor there, Danny Berger. In the meantime, we look at China, Tom, with that news a couple of hours ago. Yuan climbing on that President Xi and President Biden meeting that lasted longer. It's amazing. The bar was so low that because they ran over by 30 minutes, we, put a stamp as a great success on it.
Yeah, a low bar, but at least they are talking, and they talk for more than 3 hours. That is it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one-directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Risk losing our edge as a nation, and China and the rest of the world are catching up.
The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future.
People who are out of work, who would like to work, but they're afraid because of COVID, because of Delta, they're suffering too, and we cannot lose sight of them.
America's moving again, and your life is going to change for the better.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Francine Lacqua here in Singapore, actually, for the New Economy Forum. Here's what's coming up on today's program. Biden and Xi cool down hostilities. The two leaders call for cooperation in a longer than expected summit. Andrew Bailey feels uneasy about inflation. Evidence mounts that a shortage of workers will drive up British wages. The pound gains after UK unemployment falls. And JP Morgan sues Tesla over a $162 million payment as Elon Musk dumps more stock in the electric car maker. Now, first thing is first, so let's check in on the markets. This is what Europe is doing. I've also been watching yuan. Now, it's not the proximity to China, but it's certainly on the back of that President Xi, President Biden summit. It lasted 30 minutes more than expected, seen as a positive sign that, of course, things are getting better. We saw that cooperation over in Glasgow, certainly on climate change. The Biden administration asking China to do more on trade and to stick to their agreements. China actually asking the U.S. to do more on foreign policy. The other story, of course, we're watching is Bitcoin, 61,270. There was a bit of a sell-off, certainly a pause to the rally overall among some of the cryptocurrencies. But if you look at the European stock 600, first of all, we had a great chart that we need to bring you, looking at the valuation of European stocks compared to the U.S., actually at a record high, a record difference. And then you can see European stocks pretty much unchanged. Of course, the focus is not only on this, but also on President Biden's pick and whether he'll replace or not the Fed chair, Jay Powell. European map. Let's have a look at whether we see a difference between, for example, the UK. You can see down some 0.1%. The focus there on pound. This is closely watched because of what we're seeing overall in the markets because of unemployment, and the DAX pretty much unchanged, as is the FTSE, and the CAC 40 gaining some 0.1%. Now, Joe Biden and President Xi spoke of the need for cooperation, their first face-to-face virtual summit. Both sides are aiming to stabilize the U.S.-China relationship.
It seems to me we need to establish some common sense guardrails to be clear and honest where we disagree and work together where interests intersect, especially on vital global issues like climate change. None of this is a favor to either of our countries, what we do for one another, but it's just responsible world leadership, and you're a major world leader.
Well, joining us now is Roz Matheson, our executive editor for international government. Roz, what did this summit achieve, if anything? And good morning to you.
Good morning. Well, actually, it turned out to be a pretty candid conversation. And as you were pointing out, it went longer than they expected. That enabled both leaders to put a bunch of issues on the table and say, from where I sit, this is important, and from where I sit, this is important. Issues like Taiwan, for example, trade, access to markets, and so on. And while there were no great tangibles from any of that, aside from perhaps an acceptance by China to fast-track the ability for executives to enter the country from the US, leaving a lot of tangibles for later. What they've agreed to do is say, let's have this conversation continue. Let's this be a pathway to perhaps to further conversations between us and between the officials in our country. So if anything, it was sort of resetting the table a bit on the relationship, saying let's put a floor under some of these things. We do not want these things to escalate further, and let's get to know each other a bit more as leaders, because of course they've actually not had a proper summit since Joe Biden took office so far.
So, Roz, what does Xi and Biden actually want to resolve tension? Why do they want to resolve tensions now? Is it, is it to do something on climate, or is it just time to de-escalate because they each want something from the other side?
Well, they each have quite a domestic imperative here. Of course, Xi Jinping is coming up to a leadership meeting next year where he still needs to get proper re-endorsement for a third term as president, which kind of busts the precedents, of course, for the longevity of leaders in China. And he needs to sort of not have a dust up with the US to interfere with that, because his real focus is on the Chinese economy and on common prosperity, as he calls it, to kind of redistribute wealth within China. On the other side of the coin, of course, Joe Biden's coming into midterm elections. His focus is also very much on his own economy, where he's still trying to get very complicated tax and spending packages through Congress. So he doesn't want the distraction either at this point in time of having to really manage the relationship with China. So each of them has an incentive to de-escalate things and just to put it on a bit of an even footing, at least for the next year or so.
So, Roz, what is the next step to look for?
Well, there was no promise about timelines to meet again when that might happen, but we should look for further efforts towards conversation, possibly with lower level officials meeting again, how often that happens and involving whom, particularly on the technical side. Does it involve officials meeting to discuss tariffs, for example, which are a real big issue for China, and is there any progress on that? So what we want to see is like which officials are going to meet next and discuss what, but at least there seems to have been an agreement to keep the conversation going. So we should look for sort of further examples of when that might happen.
Roz, thank you so much. Roz Matheson there, our executive editor for international government. Now let's talk about the markets, about what the summit means actually for stocks, and then let's talk also about inflation and the possible change in pick for Fed chair. We're joined by Virginie Maisonneuve, Global Chief Investment Officer for Equities at Allianz Global Investors, who joins us now. Virginie, as always, thank you so much for coming on. When you look at President Xi and President Biden, the summit lasting longer, body language that actually seemed to be less provocative than in the past. What does it mean for markets overall going forward? I know there was a little bit of a lift to yuan.
Yeah, I think it's very good, actually. I really believe that China has entered its phase 3, phase 1 being accession to WTO, phase 2 becoming larger than Japan as an economy during the great financial crisis, and phase 3 being now where China is elbowing its spot, if you want, at the top. And with the disruption that we had during the Trump years, and President Xi made it very clear he wanted stability in the relationship, I think this discussion is very important in terms of reconnecting the two countries. Biden recognized the role of China, and it's not only as a massive economy, he made the comments on that in terms of leadership, and I think that's extremely important. China needs that recognition, and of course we need to work together on climate, we need to work together on global arms race, so this is really, really positive.
Virginie, does it actually mean that we're going to get something on trade, or some kind of, if not an agreement, at least sticking to the rules that were signed before? And does that ease at all the supply chains across the world?
So I think that issue is very delicate. Let me tell you why I think that. On one hand, I think the trade war that we've seen with China and the US is actually not really linked to trades of goods, but linked to what I call digital Darwinism, in terms of how technology, in particular artificial intelligence, is really the major tool for competitive edge over the next decades. So part of it is linked to that. Part of it is linked to the tariffs and the, relationship that was basically installed during the Trump years. I think the trades of goods, if you look at the agreement that was made, actually China has bought about half the goods that it was targeted to buy. I think there's room here from the US. I think there's room here to improve. But to me, the element around digital Darwinism is going to stay.
So what does that mean? If you look at the supply chain, if you look at some of the climate change crisis, if you look at everything that we're living through, is it going to be supportive of equities, or do you worry that actually inflation is a little bit more entrenched than central banks think?
I think in terms of overall global supply chain, you will see an improvement. And I'm expecting actually global trade to do better in 2022 as we pass, hopefully, the peak in overall global supply chain issues. All this said, you will keep some pressure in areas like semiconductors, for example, but I think there will be a path to normalization and there will be a path to improvements in overall trade between China and the US. Of course, that will have an impact on inflation, at least for the global supply chain or bottlenecks linked to supply part of inflation. As we know, there are other elements in the inflationary pressures that we are seeing now. And from my perspective, the key for equity markets is to look at the real rates. And there you still see that real rates in the US, if you look at the 10 years, minus 1%, Germany minus 2% on the 10-year bond. So this, in my view, means that risky assets are still very much need to be, bought in portfolios.
Thank you so much, Virginie. We'll get more on that. And of course, we'll look at the negative real yield. Virginie Maisonneuve at Allianz Global Investors stays with us. We'll also talk about the price of oil. Just moments ago, the IEA saying the end of the oil price rally is in sight as they think production is actually recovering. They're also talking about stockpiles. The OECD oil stockpiles have dropped to the low since 2015. They believe that actually OPEC Plus may pump 1.1 million barrels a day above the call on its crude in the first quarter of 2022. We'll have plenty more on crude oil. We'll be live with Youssef Kamaldeen from ADPEC, and we'll also go back to Virginie on inflation. This is Bloomberg.
You finally got your taste of MIT, so why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
What is the difference between phase out and phase down? I don't know. But you know, during the process of the transition, we'll have to rely on whatever means of energy that they have. I mean, if suddenly somebody could enhance their, the availability of petrol, diesel, gas in the market, people would not have to use that. But it's not India alone. I mean, India is one of the countries. Now, very often what happens, it's also a very convenient play to take the focus off oil and gas and to suddenly talk about coal as if that were the main issue of discussion here. So as I said, there's a little play around here, and whatever that language is, where it came from, etc. I mean, a large number of countries which will, in the short run, have to make sure that their citizens are supplied with electricity.
India's Energy Minister Hardeep Singh Puri there at ADIPEC in Abu Dhabi, speaking exclusively to Bloomberg anchor Youssef Gama-Eldin a little bit earlier. Now let's bring back Virginie Maisonneuve, Global Chief Investment Officer, Equity at Allianz Global Investors. Virginie, I don't know how we look at oil. It's crazy difficult to predict because we've always said that the price of oil is almost as volatile as other things. But as long as it's within a range, it means that we could see a stable economy. What happens if oil reaches 100? Is there a bigger push to renewables? And how do you play it actually in the global equity space?
Yeah, so I think what's really important is to reflect on the reason why oil prices have been stronger. One element is the miscalibration between the green path, if you want, the longer green path, and the short-term element of post-pandemic rebound. And in that transformation to the green path, there's been clearly some misadjustments, which is completely normal, at the time when there was the option to reduce supply. Beyond that, I truly believe that what we need to think about is, the discussions at COP26, which are absolutely critical. And you will notice that we talk now about 1.8 and not 1.5 anymore. So what will happen? If oil goes above $80, it will invite additional supply. That will, of course, create, depending on what growth is and how fast the transformation to the green energy map, if you want, is going to have an impact. So it's going to be a question of calibration. If you look at overall growth, GDP growth next year, it should be lower than what it is this year, clearly post the rebound. You'll also have a China that will probably grow at around 5%. And China is a big consumer of oil. So, if oil really reached $100, I think that would be quite a bit of a surprise, but it would be a spike as opposed to a sustainable level, in my view.
Virginie, overall, I mean, there's quite a lot to ask you about, whether you put your money into the UK at the moment. I don't know whether a rate hike is imminent after the disappointment, certainly from traders that were hoping and positioned for a rate hike, whether it's back on the table in December because of the employment figure today and how you see, in general, inflation panning out in the UK.
That's interesting. So the numbers we got today were actually quite good in terms of the job numbers, bringing the unemployment rate to 4.3%. And people were expecting 4.4 from 4.5, so an improvement. And clearly, the key issue for the central bank with regards to the expected rate increase last month was really around furlough workers and the end of the subsidies, if you want, to wages. Now, what the data shows us this month is that a lot of workers are actually returning to work as opposed to stay inactive, and that's very positive. That, I believe, opens the path for a rate increase in the UK, as we are seeing a fair amount of inflation in the system.
Virginie, thank you so much for your time today. As always, Virginie Maisonneuve, their Chief Investment Officer at Global Equity of Global Equity at Allianz Global Investors. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU may ease restrictions on state aid for the semiconductor industry. The European Commission could agree to a new policy when it meets tomorrow. A draft of the policy paper seen by Bloomberg considers letting governments subsidize chip plants on the continent. The French have called for more intervention to overcome the global supply crisis. Now, Germany's daily coronavirus deaths have jumped by 265, the most in more than 5 months. It comes as cases over the past 7 days have climbed to a record. Chancellor Angela Merkel and her successor Olaf Scholz will hold a video conference on Thursday with state leaders to discuss those next steps. A new coalition is planning to introduce legislation later this week that would impose tougher curbs on the unvaccinated. Boris Johnson has said it would be perfectly legitimate to suspend part of the Brexit deal with the EU. The UK is demanding a major overhaul of the divorce agreement due to the impact on Northern Ireland. Suspending the deal carries a risk of severe retaliation from the EU. The Prime Minister also said his government still wants to negotiate a solution to the escalating trade dispute. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, cryptocurrencies under pressure. We'll look at what's driving digital tokens lower next. This is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in Singapore from the Bloomberg New Economy Forum. Now, cryptocurrencies under some pressure today. Bitcoin has been sliding towards $60,000, Ether touching one of its lowest levels this month. Well, Bloomberg's Joanna Ossinger covers crypto, and she joins us now. Joanna, first of all, is this a drop or is this just a pause in the rally, and what's behind it?
Hi, Francine. So there are a few things behind it. And of course, Bitcoin has been stuck in this mostly low 60,000s range for a while. So it's not a huge breakout at this point. But we had a couple things. We had the infrastructure bill passed in the US, which did have some crypto tax provisions that made the market a little nervous. And so some trading around that of people trying to buy the dip, and then some leverage may have made the market a little fragile. And then we had China coming out and warning state firms about crypto mining, saying that they need to get out of it. It's considering imposing punitive measures in the near term. So that really did unnerve the market, and we had a pretty big drop. So crypto is definitely at the lows for the past 2 or 3 weeks.
So, Joanna, what kind of longer-term implications will actually all of these factors have?
Yeah, it's a little bit hard to say because China at this point, so many firms have gotten out of China. Many of the miners have gotten out. So if it is true that these big state-owned enterprises are doing any crypto mining and this has an impact, that would be pretty interesting. But a lot of places have gotten out. So China is not what it once was in terms of a factor. So we'll have to see if it does cause any longer-term issues. But still, crypto bulls are talking about that 100,000 level for the end of the year. So they're pretty undaunted by it. But it does mean some choppiness in the near term, probably.
Joanna, this is probably the most difficult question I'm asking all day. What's the near-term outlook for crypto prices?
Yeah, so it is likely to be somewhat choppy here. And of course, crypto is quite volatile. It can go down just as easily as it can go up. It's easy to see a drop of 10%, 20%. So actually, these drops are not all that severe relatively. They happen every few weeks. But again, the bulls are saying 100,000. There is the round number level of 60,000 on Bitcoin. It's just a little bit above that now. We have resistance around 65,000. So we could see we're likely to see some choppiness, but also the fourth quarter does tend to be good for Bitcoin. We have seen a lot of bigger holders continuing to buy. So the market could be underpinned for the next few weeks at least.
Joanna, thank you so much. Joanna Ossinger there for the very latest on cryptocurrencies. Now, coming up, we speak to the Chief Operating Officer of one of the world's largest asset managers. Timur Hiat from PGIM joins us next. If you have any questions for him, you can just IB plus TV Go, or you can also tweet me directly at FLAC1. Now, I'm here in Singapore from the Bloomberg New Economy Forum. Starting tomorrow, we'll be in conversation with David Solomon, Goldman Sachs, Sundar Pichai, the Alphabet and Google Chief Executive Officer, amongst others. This is Bloomberg.
esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about? Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Biden and Xi cooled down hostilities while the two leaders call for cooperation in a longer-than-expected summit. Andrew Bailey feels uneasy about inflation while evidence mounts that a shortage of workers will actually drive up British wages, the pound gains, after UK unemployment falls. And JP Morgan sues Tesla over $162 million payment as Elon Musk dumps more stock in the electric car maker. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore. Over the next few days, we'll bring you the Bloomberg New Economy Forum. But first thing is first, let's check in on the markets. A lot of the focus, of course, is on the possible reappointment or not of Jay Powell as Fed chair. That could move the markets, although the replacement that we've been talking about could be Lael Brainard, very dovish, and not much of a change in tone from what we heard from Mr. Powell. The focus also on this, of course, President Xi and President Biden seeking cooperation longer than expected summit. Stocks are pretty much steady. We did see a bit of a liftoff in Chinese renminbi. The yuan actually approaching its strongest level since 2018 on hopes of easing tensions. And overall, you can see the markets liking what they're seeing. The focus also on UK unemployment better than expected. And you can see cable at 134.63. Now, let's discuss the markets with the COO of one of the world's largest asset managers. PGIM, formerly Prudential Asset Management, manages more than $1 trillion. And Timur Hayat plays a crucial role in its success over the past 8 years. His latest Megatrends research piece is on the investment implications of technological disruption in the service economy. Well, Timur Hayat, welcome to Bloomberg. Thank you so much for joining us. And I know you've just traveled to London, so it'll be also interesting to know your thoughts on the various regions. First of all, this technological disruption, are we underestimating or overestimating the effect as we get out of the pandemic? What's here to stay?
So the pandemic clearly accelerated, Francine, technological disruption and just the pace of people adopting technology across all sectors. And we really dug into services this time because services are about 75% of employment in developed markets, 50% of employment in emerging markets, and about 2/3 of global GDP. And it's been later in services than in manufacturing and retail. And we think it's going to be pretty disruptive, but it's going to play out in a quite different way than it did in manufacturing and retail. For starters, the big incumbents have seen the movie play out already. They have much more regulatory protection in healthcare, in financial services than some of the early places where the tech startups really dominated and decimated the incumbents. Yeah. And then customer acquisition costs are just so much more expensive. You don't change your doctor, you don't change your financial advisor the way you might change the place where you buy, your shampoo. And so we think a bunch of incumbents, companies like JP Morgan, Santander, others who are investing in technology, buying companies like JP Morgan bought Nutmeg, Aviva bought Wealthify, are going to be actually part of the winning set. But there are 2 or 3 areas where a bunch of new disruptors will come in, even in services. And that's also part of our focus of what research we did and the investing we do.
Yeah, and Timur, this is, I guess, one of the big questions, actually. If you look at European valuations compared to U.S. ones, it does mean that, it seems that investors just want the big sexy names that are disrupted, that are willing to pay a pretty hefty premium, even for companies that haven't made a profit yet. And it's laggards, it's the old economy that will be left behind. How long does this last?
I think you're absolutely right. I mean, we are in a bubble, obviously, in cryptocurrency. You were just discussing probably in equity markets. And we see three kinds of opportunities, Francine, in this sort of tech disruption in services. The first is, you'll probably have to go into private markets as an investor a little bit for this. But the neobanks and the new payment platforms that are kind of taking over from the MasterCards and Visas are actually spaces where, there is an opportunity to go after new customers that banks never went after, and where the regulatory hurdles are less, and where with buy now, pay later, you can actually glom onto the customer bases of big retailers rather than having to build your own. So that's a space for opportunity. Then there's emerging markets. 90% of emerging markets still operate in cash, like India or Mexico. And there is an opportunity to kind of leapfrog all that banking network that was never built there. And there are a whole range of companies, Mercado Pago, others that are essentially taking payments away from the old banking network into a new one. And then we are pretty bullish also on just the sort of infrastructure, the pipes and plumbing that underpins this. Companies like Connection in London, for example, that sort of provide logistics infrastructure. The kinds of people who, when you make a call to your Uber driver, provide the phone call connection that anonymizes both sides. That pipe and plumbing all the way to data centers and fiber networks is going to be a very safe place and probably less overpriced than some of the big names, Francine, that you mentioned everybody focuses on.
But Timur, is there actually a danger that chronic underinvestment in old economies, such as energy, even as we go into transition in certain parts of fuel sources, means that actually we could see shocks like we're seeing in energy elsewhere in the economy?
I think coal in the US as well now, right? You see the pricing because of the supply shortages. So I think you're absolutely right. Investments in old fossil fuel energies, particularly coal, is going down. I think, Francine, that's actually the right thing. And our view is this is more transitory. This is kind of pandemic supply chain issues and pent-up demand catching up. And ultimately, the investment is going into this slow sunset, but very important transition into the non-fossil fuel economy. And there we are seeing tons of investments, tons of investor interest, tons of opportunity.
Timur, where do you see, the biggest misprice? I don't know whether it's a bubble. We call it a bubble if it's not burst yet. Or is it something that makes you very uneasy and unnerving on the markets right now?
I think it's this whole cryptocurrency space, which I very much distinguish from the DeFi space and from digital currencies. That is one area where I think hedge funds on the other side of retail investors are making a lot of money by trading cryptocurrency. But this sort of speculative rush there is one area. I do think, I'm glad it's calmed down, but SPACs is probably another area where there's a bit of a bubble, although it's calming down now. And I do think there are a bunch of technologies that are probably overhyped in the media versus the real opportunity now where investors can make a return in their lifetimes. As one example would be the public blockchain. I'm very positive on private blockchains and transactions, but the public blockchain with its ESG issues, with just kind of anti-money laundering and lack of clarity on customers, we think is a very long-term opportunity. And also autonomous vehicles. I think a lot of money's gone in, and it's going to take a long time for that to turn into reality.
Timur, you also beautifully laid out actually some of the investment opportunities when it comes to technological disruption in the services economy. You mentioned actually something about regulation. Do you think regulation is coming to an extent that we're not realizing that could really disrupt that world?
Absolutely, Francine. You hit on a key risk here. I think I divide it into two areas. Developed market regulation, where everything from the algorithms behind AI and their potential biases, privacy laws, just the testing regime to get autonomous vehicles up. You saw after the accident in Arizona in the US, just how much the regulators kind of kicked in terms of, slowing down that testing cycle. So I do think sort of what we call techlash in developed markets is going to be a big issue. And then as China in particular fights inequality and the rise of these new billionaires and tries to protect its middle class, I think that's the driving force behind a lot of what you see as emerging market regulation. And then, of course, you had India, which banned 59 Chinese apps, including TikTok. So I think you're going to see more and more regulation, and every investor should have someone focused on regulatory risk as a key risk as they invest across services or across the broader technology sector.
Timur, thank you so much. Timur Hayat there, Chief Operating Officer at PGIM, stays with us. So we'll talk a lot more about some of the emerging economies as well. Now, coming up, Saudi Arabia, Russia, and the UAE signal OPEC Plus will continue raising oil output cautiously. So we return to ADOPEC in Abu Dhabi shortly. We also have this headline coming in on the Bloomberg terminal saying Germany temporarily suspending its Nord Stream 2 certification. This could be because of pressure from elsewhere. We'll look into that and we'll dig a little deeper. This is Bloomberg.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public because I am the conscience of those folks who, of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 1:37 right now. It's a weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
The energy industry is in very huge transition, very exciting times, obviously. Everybody's making an adjustment to make sure that we meet the net carbon zero target of 2050. For some countries can't make it at 2050, but obviously the whole energy industry is adjusting, is changing. People are, businesses are seeing realities that are with us. And of course, it also creates new opportunities that we can see today. Business focus is changing. People are going into more gas development across the globe, and also bringing on table blue hydrogen and also green hydrogen. And so much is happening, and we see as a national company a great opportunity unfolding.
You've spoken in the past about Nigeria's production problems. Currently, you're at what, about 1.45 million barrels per day, which is about 200,000 barrels a day lower than kind of where your capacity theoretically is. How quickly can you ramp back up and get to that?
Yeah, it's very obvious that by close of the year, we would get back to the 1.7, 1.8 of the crude only. Of course, as you may be aware, you know, when we mention this figure, we're only talking about the crude oil only. We do produce condensate, and when you combine all this, we can easily hit the 2.0 by the end of the year. But the fact is very clear. During the COVID-19 situation, you know, we shut down some of this. Well, of course, they naturally don't get back when you want them and how you want them. And that's the work we're doing. And of course, we do have some challenges around the facilities. These have been taken care of, and there's enormous work and intervention going on that will get us back before the end of the year.
To what extent has an absence of new international investments contributed to the challenges you have today?
Yeah, obviously the COVID-19 challenge to low investment in the oil and gas sector particularly. And of course, this coming back, particularly for our country, you know, there was some level of lack of clarity around our fiscal environment, and that has been sorted out with the passage of the Petroleum Industry Act. And the meaning of this is that we've seen very good traction with our key partners around, particularly on the deep offshore asset development. And I would think things will pick up, and obviously there are a number of engagements going on that are pointing towards a potentially return back to the full investment situation that we saw prior to the COVID-19 period.
Well, that was Mele Kyari, the managing director of the NNPC, talking to Youssef Kamaldeen at ADIPEC. Youssef joins us now from Abu Dhabi, where he's, of course, been speaking with some key figures of the oil industry. Youssef, I'm not going to ask you about the price of oil, though I really want to, but the debate on whether the U.S. will actually tap its strategic reserves is underway. What have you been hearing?
Well, Francine, we've heard all kinds of opinions on this all across the spectrum. But what is clear is that it might not make as big as a difference as maybe some political officials would like to see. We understand that release from the strategic petroleum reserves is usually done in crises, and that's what the Indian energy minister said. There's no point in releasing reserves, whether in the United States or elsewhere, because we're not in that crisis situation. But with that being said, I just want to highlight some of the numbers we just got moments ago from the IEA. The world oil demand forecast pretty much unchanged at 99.7 million barrels per day. But what caught my attention and some of the officials just around me here is the supply side of the forecast, which has been increased by 1.5 million barrels per day just in November and December. The bulk of that is going to come from the U.S., from Saudi Arabia, and from Russia. And what that means is that the supply crunch that the market's so worried about is going to start easing, and it also fits into the OPEC Plus narrative. They've been saying our current regiment of 400,000 barrels per day every month, that is going to be enough for the market to start easing and prices to start becoming more sustainable. Francine.
Thank you so much, Youssef Kamaldeen, there for us in Abu Dhabi. Now, we're just getting some breaking news out of Nord Stream 2. Now, first of all, there has been quite a lot of talk, especially fighting talk from Boris Johnson and the UK, saying that European nations must choose between mainlining Russian gas and defending peace in Ukraine. Now, separately, but maybe the market reaction thinks that it's linked, there was a Bloomberg headline that actually crossed the Bloomberg terminal saying that Nord Stream 2 certification has been suspended on a legal form change in Germany. Now, from what I can understand, this is actually a procedural change. So it doesn't mean that they're backing away because they're worried about Ukraine or trying to punish Russia or send a message. But we understand through the statement that the German Federal Network Agencies says that there's a certification procedure. It sounds quite dull, but actually these things can take time due to a change in the legal form of Nord Stream 2. From what I understand, the procedural will actually remain suspended until the main assets and human resources have then transferred it to the subsidiary. So it seems like a procedure that's still sending the gas price higher. It was getting some 12%, now getting some 9%. So I wonder whether there's a little bit of a mismatch on the procedure and actually markets interpreting it more as a political statement. I guess we'll have to wait and see to see what happens. Now, still with us, Taimur Hayat. He's Chief Operating Officer at PGIM. Taimur, there's a lot of questions actually on the energy transition that we mentioned, on some of these supply shocks and what it means for the world economy. But overall, where are you on the world economy? Productivity is advancing, I guess, because of the technology being used that we were talking about. Are you confident that the economy from now will not relapse into some kind of recession?
I think there is a link back to inflation, Francine, and the main risk to our fairly bullish view on the global economy as it bounces back from the pandemic. I think each subsequent wave has a smaller effect on the economy, is potential Fed and other central bank overreaction to inflation risk. And an overreaction is the one thing that I think could topple the world back into a recession. But other than that, we are fairly bullish. And I think underpinning that view is our view that inflation is transitory.
Taimur, what if it isn't transitory? I mean, this is, what the market has to grapple with day in, day out. What does a policy mistake look like right now? Is it holding on to, those interest rates, to not hiking soon enough, or is it the reverse?
I think it's definitely the risk of hiking too soon, Francine. And the reason we believe the inflation risk is transitory but still kind of had that tail risk scenario you and I are talking about is, the post-pandemic world is not going to be different from the pre-pandemic world. And there were big downward pressures because of wage-reducing or wage non-enhancing technology, because of an aging global population. And those factors are ultimately going to act as a downward pressure on pricing. And everything I see, despite the kind of areas like energy and labor markets where there are definitely shortages and price increases that are hitting us all, everything I see is because of pent-up demand and because of supply chains that still need to unravel, admittedly taking longer than one might have initially thought. But once they work themselves out of the system over the next 12, maybe 16 months, we think we're going to see inflation pressure go down. But there is the risk that central banks overreact, and that is, I think, the biggest risk to the global economy.
Taimur, thank you so much for all of your time today. Taimur Hayat there, COO at PGIM, joining us from London. Now, coming up, JP Morgan sues Tesla. The U.S. bank goes to court over $162 million payment. Elon Musk also dumps more stock in the electric car maker. We'll have plenty more on Tesla shortly. This is Bloomberg. Stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's as simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked of other things. Now that's moving to become mandatory.
It's such an interesting new world.
The world is changing. For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore from the Bloomberg New Economy Forum. Now, Elon Musk sells more Tesla shares. Filings revealed that Musk offloaded about $930 million worth of Tesla yesterday. That adds to the $6.9 billion he already sold last week. Well, joining us now is our Bloomberg Daybreak anchor, Danny Berger. Danny, good morning, good afternoon. How close is Musk to actually selling the 10% he had promised following that Twitter poll?
Francine, he still has a very long way to go. Yesterday's sale was only about 5% if you're assuming he sells 17 million shares, which would get him to that 10% threshold. So about 57% of his shares are left. He's only sold about 7.3 million. Now, this was through exercising options and then selling those shares themselves. A lot has been made about this tweet, the 10%, whether it was just already planned to be sold and it just worked with the timing. He did talk about some of these sales back in September, saying that he had a large block of options expiring and he planned to exercise them and sell around the end of the year. Despite all of that, Tesla shares have fallen about 17% since he started on this latest trajectory of selling. Let's get you a pre-market look at Tesla. We're down about 1.4% again this morning after shares had already fallen more than 1% yesterday, Francine.
Yeah, I have to say I was, mesmerized with Twitter and some of the massive trolling by both Bernie Sanders and Elon Musk. A new legal complaint. Now, away from the Twitter trolls, a new legal complaint, Danny, was also filed against Tesla yesterday. JP Morgan suing Tesla over unpaid warrants. But what exactly is the dispute here?
Well, a lot of Tesla and Elon Musk news over the past week, to be sure. Well, Francine, it all centers around this perhaps infamous tweet from Elon Musk talking about considering taking Tesla private, funding secured. This was back in 2018. But at the time, JP Morgan had sold warrants, had derivatives to Tesla. Basically, they had a strike price. If Tesla closed above that strike price, then they'd have to pay the bank. But Elon Musk tweets this, and JP Morgan says, okay, this constitutes a significant corporate event. That allows us to lower the strike price. In other words, there's more room for Tesla having to close above that level and pay them. They say that they were within their rights to do this. Tesla at the time took issue with it. We haven't heard from Tesla since JP Morgan filed this complaint yesterday. But Francine, you and I talked about this earlier. This dispute is over $162 million for a $1 trillion company and a big mega bank. That is just peanuts. So it's pretty significant that this fraught relationship is happening over what for them is a pretty trivial amount.
Yeah, so is this because they don't want to set a precedent, Danny? Is it because it attracts attention because it's Tesla? Like, what exactly is behind it?
It is entirely possible that that's behind it. Again, this is really as much as we've seen from JP Morgan, this filing, that they've refused to settle at the contractual strike price and pay in full what it owes to JP Morgan. So it could be a Tesla thing in itself, because we know there is a lot of volatility around Tesla. There's a propensity of Elon Musk to tweet, and sometimes for that to move share prices, which of course the SEC back in 2018 got on Tesla's price. But of course, JP Morgan has a lot of these type of contracts. So, again, this could be a wider thing beyond Tesla just setting a precedent. But so far, again, the commentary we know about this, which stems from back in 2018, is this filing, and Tesla has yet to respond, Francine.
Thank you so much, our Danny Berger, our Daybreak anchor. Elon Musk tweeting, changing the share price. We've never seen anything like it, Danny. Now, Bloomberg Surveillance Early Edition continues in the next hour. Anna Edwards is in London. Matt Miller will be in Berlin. And I think Danny Berger will also be in London. Now, the focus firmly, of course, on the markets. I'm here in Singapore for the Bloomberg New Economy Forum. It starts tomorrow, and over the next few days, we'll be speaking to some of the biggest names in business, including Sundar Pichai from Alphabet, David Solomon from Goldman Sachs. So for the moment, stocks are pretty much steady. We're also expecting an announcement imminently on the Fed chair, so look out for news on Jay Powell or Lael Brainard. This is Bloomberg.
remaining.
101 years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We risk losing our edge as a nation. And China and the rest of the world are catching up.
The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future.
People who are out of work, who would like to work, but they're afraid because of COVID, because of Delta, they're suffering too, and we cannot lose sight of them.
America's moving again, and your life is going to change for the better.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, November the 16th. Our top stories today. The virtual summit, Joe Biden and Xi Jinping take on a number of sensitive issues that divide the U.S. and China. They talked longer than expected, but produced no major breakthroughs. Elon Musk keeps selling. This time, the Tesla CEO offloads $930 million worth of shares. Meanwhile, JP Morgan is suing the electric car maker in a dispute over unpaid warrants. And crypto takes a hit. Bitcoin slides towards 60,000 and Ether falls too. Some point their fingers at tax changes in the new U.S. infrastructure bill. Good morning, everybody. Welcome to Bloomberg Surveillance, the early edition. I'm Anna Edwards with Tom McKenzie live in London. Matt Miller, of course, with us in New York. Kaylee Lines is off this week. And Matt, a day when markets fairly quiet, but plenty of geopolitics back to the fore to talk about.
Yeah, a lot of geopolitics here, and that's why we see, for example, a rise in the yuan today. Take a look at what's going on in stocks. This is a CSI 300, really unchanged at 48.83. We do have gains in Hong Kong and in Japan, or we did see gains. Those markets are closed now, but you've got losses in Australia. And I thought it was interesting that we see the ASX 200 down 0.2%, and Australian debt also getting sold off, the yield coming up there. So investors it's a sell everything moment for Australia today. Here you see a little bit of movement. This is the offshore yuan. Maybe the onshore yuan looks a little bit different, but just investors watching it very closely after the Biden-Xi summit that we're going to talk about. In terms of what's going on in U.S. markets, we're looking at S&P futures that are down a little bit, but really not a lot of movement here. Still waiting to hear about the Fed chair. That's going to be a decision that could move markets today. 46.76 there. The 10-year yield coming off a little bit, still at basically 160 at 159.74. Gold is very interesting today. moving higher as real yields fall. 18.73 a troy ounce right now, and crude is coming back a little bit at 81.38 a barrel. Take a look at Bitcoin. Over the past 3 days, we've really seen it come down, and for our radio listeners, I'll welcome you on London DAB Digital and tell you we're looking at 59,790 right now, so coming down in under 60,000. As Anna said, there are some tax changes that may be spooking some people. Of course, there was also a giant rally. What we don't see is Elon Musk pouring money into Bitcoin with the proceeds from his sale, Tom.
Yeah, not yet, at least, Matt. Look, you talked about the geopolitics. You can't dissect the geopolitics between the US and China with the impacts, of course, on Europe, given it is a major exporter to the world's second largest economy. We can see the follow-through as well. On the back of commentary from ECB's Christine Lagarde providing a supportive backdrop, no rate hikes in 2022, at least very unlikely. So the European markets are continuing to grind higher, modestly, but they are still in record territory. The UK is a bit of a standout. It's currently flat. We had better jobs numbers, 160,000 new jobs added, but that's building the case for the BOE to hike in December. That is starting to be factored in by investors. Flat on the FTSE 100. You're seeing gains over in Germany, 0.3%, despite the fact that you have deaths as a result of COVID getting back up to very high levels, and discussions in the halls of power in Germany as to whether or not they put unvaccinated people in a lockdown. In terms of how cross assets things are playing out, here is your benchmark for Europe, gains of 0.2%. In terms of semiconductors, I want to bring this to your attention because there is a debate going on within the European Commission officials in Brussels as to what to do to shore up supply chains. We're hearing that on Wednesday there may be an announcement around plans for national governments to support the semiconductor industry. So I wanted to point your attention to this semiconductor index for Europe. Gains of 0.2%. The pound, of course, in focus given these hike expectations in December, linked to the improving jobs picture in the UK. 134. Bitcoin, you've mentioned, down by just over 6%.
Yeah, absolutely. And Tom, we'll certainly get to the conversation around the UK, the tight labour market in focus here. We'll get to that shortly. First, let's tell you what lies ahead. Get a look at some of the things on our radar today. US retail sales data is released at 8:30 New York time. Economists expect that price increases will hurt consumer demand in the near term. The size of the US consumer as a part of the US economy puts this data front and centre. We saw weak consumer confidence data, of course, just last week as a result of higher inflation. Now, Fed presidents thinking about inflation, Thomas Barkin, Esther George, Raphael Bostic, they take part in a discussion about, yes, the economy, also about racism. That's at 12 New York time. We'll look for lines to come out of that. And the 4th annual Bloomberg New Economy Forum convenes in Singapore, running through until Friday. Speakers will include Bill Gates, Alphabet's Sundar Pichai, and Goldman's David Solomon. So a full lineup of guests, plenty to talk about. No doubt some of them will be reflecting on the geopolitics as well then, Tom.
Yeah, and the top story, of course, for us this morning, President Biden and China's Xi Jinping spoke of the need for cooperation. It was their first virtual summit. The video conference lasted longer than expected, but the two leaders announced no major breakthroughs.
It seems to me we need to establish some common sense guardrails to be clear and honest where we disagree and work together where interests intersect, especially on vital global issues like climate change. None of this is a favor to either of our countries, what we do for one another, but it's just responsible world leadership, and you're a major world leader.
Joe Matthew, Bloomberg Washington correspondent, joins from our DC bureau for the take on this out of Washington. What are the key takeaways, do you think? In the markets, you look at the yuan, it's strengthened. Certainly, there's optimism in China on the back of these conversations. What are the key takeaways from you? Does it shore up the relationship?
Well, no damage was done, we'll put it that way, and this was carefully choreographed. There were no surprises going in and none coming out. To your point, no real deliverables here. The tone was cordial. The meeting, as you said, went longer than expected, topping 3 hours. Of course, they were not in the same room. The two gentlemen, these two leaders, were speaking to each other on screens, almost like a Zoom call. Interesting, though, not a lot has changed. The tariffs are still in place here. China's posture on Taiwan has not changed. President Xi did not actually even invite President Biden to the Beijing Winter Olympics, as some had speculated might come from this. But as we look ahead, nothing was made worse as well. Like I said, the one takeaway may be now the likelihood of another meeting hopefully that next one will be face-to-face.
What a snub. You're holding the Winter Olympics and you don't even invite the U.S. president. What's next for President Biden's agenda, Joe?
Well, if you're talking about his economic agenda, he's going up to New Hampshire, as a matter of fact, Woodstock, New Hampshire, to make the case for the reconciliation bill that, Matt, will likely get a vote this week. At least that is what we were hearing. That was the promise made by Speaker Nancy Pelosi. The thing is, we're waiting around for what they call scoring, the analysis from the Congressional Budget Office to find out if this social spending bill is actually paid for. There is now a growing belief that that will not be the case when the CBO comes out with numbers, so that could delay things potentially into the weekend. But Speaker Pelosi, indeed, working on another self-imposed deadline, having promised progressives that this will get a vote this week, so we could be here for a couple of more days waiting for those numbers to come out.
All right, Joe, thanks very much. Bloomberg's Joe Matthew there, and I have to say, one of the best things about being back in the U.S. is I listen to Bloomberg Radio constantly. I listen to Joe every weekday. You can check him out on his program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, J.P. Morgan has sued Tesla, seeking a $162 million payment for unpaid warrants. Meanwhile, Elon Musk continues to sell more Tesla shares. Let's get the story, well, the latest on this evolving story with Bloomberg's Craig Trudell, who runs our auto coverage out of Europe. Craig, what do we know about, first off, this lawsuit?
Yeah, so this is an example of Elon's 2018 tweeting about having funding secured and taking Tesla private, coming back to bite again. It's a small amount of money at stake here, but it has to do with a warrant transaction that Tesla did with J.P. Morgan that helped mitigate the risk of stock dilution related to convertible bonds, and also was related to a federal income tax deduction for Tesla. There's a dispute here over the change in the strike price of these warrants and whether or not, in Tesla's view, J.P. Morgan was sort of opportunistic of kind of taking advantage of the volatility of Tesla shares around that time. We still have not heard Tesla respond to this lawsuit to the extent that we know what Tesla's views are. It's within J.P. Morgan's claims, and so we'll wait to hear from Tesla what their view is on whether or not J.P. Morgan has a case here.
Craig, it's pretty fascinating, isn't it, to see these two titans in their own sectors battling it out over what is, for them, a pretty paltry amount. Bloomberg pointed this out earlier in the day for us. Where are we in terms of Musk's selling down of his stock?
It feels like we're going to have a bit of a Groundhog Day situation here, where we may wake up day after day for a couple of weeks maybe, where there are these dribbling out of sales. He's got a lot of warrants left to exercise. He's got a lot of shares to sell in order to reach that threshold that he alluded to in his Twitter poll a couple of weekends back. So it may be the case that we'll keep seeing sales. What we've seen is that this is continually put pressure on the stock. It's hard to also kind of pick apart to what extent his rowdiness on Twitter and picking fights with the likes of Bernie Sanders is helping matters as well.
Yeah, it's certainly a style choice. Craig, thank you very much. Bloomberg's Craig Trudell with the latest on the auto sector and varied themes relating to it. Now, the International Energy Agency says that the end of the oil price rally is in sight as production recovers in the United States and elsewhere. Bloomberg's Youssef Gamel Eldin is currently at the ADIPEC conference in Abu Dhabi and has been speaking to some key figures in the energy industry.
The energy industry is in very huge transition, very exciting times, obviously. Everybody's making an adjustment to make sure that we meet the net carbon zero target of 2050. For some countries can't make it at 2050, but obviously the whole energy industry is adjusting, is changing.
For the foreseeable future, traditional fuels, petrol and diesel, petroleum are going to be the mainstay of the global economy. And I think we need to factor in very carefully what happens when those prices go through the roof.
There is, of course, some hype in the market, but at the same time, looking forward, we have the seasonal drop in demand in winter. We have more and more oil coming from the OPEC Plus group, 400,000 barrels a month. Every month is being added. And coupled with a seasonal throw in demand and some more lockdowns which you're experiencing, we believe that there is no deficit at the moment. There will be surplus.
We are not going to continue having this problem that we are seeing today moving to the first quarter of next year. And that is the comforting news.
Let's get more on the oil markets. Bloomberg's Yusuf Kamel El-Din joins us then, still on the ground for us in Abu Dhabi. Yusuf, good morning. So the IEA says the end of the oil price rally is in sight as production is recovering. What's the view on the ground there?
Absolutely. So those were some very interesting numbers. Yeah, sure, on the demand side, the forecast for 2022 largely stays unchanged. But on the supply side, an increase of 1.5 million barrels per day in November and December, largely led by Saudi Arabia, the United States, and Russia, with Saudi Arabia and Russia pumping about 10 million barrels a day. This fits in with the OPEC Plus narrative that we've been hearing in the conversations with the many ministers and CEOs, is that as we get into 2022, the supply side of the equation is going to improve. Now, that's not necessarily going to take the heat off the strategic petroleum reserves released in the United States. U.S. gasoline prices at a 7-year high. A lot of pressure on the U.S. administration to bring those down. And it's the same kind of feeling in India. The energy minister telling me that they think these kinds of levels of oil prices are not sustainable and that OPEC Plus does need to act sooner rather than later. Guys.
Okay, Yusuf, thanks very much. Bloomberg's Yusuf Kamel El-Din tracking the oil story for us. And Matt, we need, when we're thinking about commodities and energy prices, we need to think about natural gas. Certainly here from a European perspective, we've seen another spike in that today. This all connected with the Nord Stream 2 pipeline headline coming out of Germany, putting that process of approval on hold. But it seemed to look a little bit procedural when you dug into the detail.
It does, and I'm someone who's dealt with German bureaucracy. It's not easy, but Nord Stream 2 has brought this upon themselves. This is the problem. Nord Stream 2's permitting has been suspended. The licensing has been suspended because Nord Stream transferred the pipeline to a subsidiary. Now, the German regulator won't allow that permitting to go on until Nord Stream also transfers its assets and human resources to the subsidiary. Nonetheless, natural gas is up 11–12% right now, so a big jump there. Let's take a look at some of the stocks in the pre-market this morning. Lucid is one of the biggest pre-market traders in terms of volume. This is an electric car manufacturer that's looking to put out about 20,000 units next year. The CEO, Peter Rawlinson, said he thinks they can stick to that. It's going to be difficult with the supply chain crisis, but he's confident that they can hit that target. As a result, the shares are up, and other EV makers, for example, Rivian is up in the pre-market as well. Coinbase is one that's down. Now, actually, Coinbase has held up pretty well over the past couple of days, even though Bitcoin has been coming off its highs. Nonetheless, right now it's trading down 6% in the pre-market, so keep your eye on anything related to crypto or crypto exchanges. And then Boeing had an awesome day yesterday. Boeing was up almost 6%, its best day since March, on positive news about the Dreamliner getting back online and recertification of the 737 MAX. It's down in the pre-market today, and Bloomberg Businessweek, I have to say, has a story out reminding investors that the 737 MAX was, those problems were all from Boeing, not from the pilots. So just another reminder that they've had real issues with this aircraft, and time again, they haven't been able to fix them. Hopefully now, I know my co-host on Bloomberg Radio, Paul Sweeney, flew twice on a 737 MAX over the last couple of weeks, and he is fortunately safe and sound back in our radio studio. So hopefully now they've got those problems dealt with, Anna.
Hopefully those are behind us. Yeah, really interesting big take story from the team. Coming up on this program then, Matt, crypto's big retreat. Ether touching one of its lowest levels in months. We've talked about crypto from a number of angles already this morning. We'll get to that. We'll also talk about European credit markets, perhaps Chinese credit markets as well, with Madeline Jones of Oaktree Capital, plus calls for cooperation. We'll discuss what changes to expect after the US-China summit with Michael Herson of Eurasia Group. This is Bloomberg.
Where's the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards and Tom McKenzie in London. Now, we're watching Bitcoin very closely, of course, every day here at Bloomberg Television. We've seen it jump up to $68,000 over the past couple of weeks. It's been sliding over the past couple of sessions, though, and is now down back below $60,000. Eddie Vandervalt from the Bloomberg MLive team joins us now, hopefully with a little bit of an explanation. Eddie, do we know what's dropping prices here? Is it really tax concerns after the infrastructure bill?
Oh, possibly. I mean, you know, there are so many moving parts in Bitcoin. You never quite know exactly what it is that's driving the price one way or the other. And really, if you look at the, you know, the levels of volatility that you generally see in Bitcoin, this is not astounding, right? I mean, we've seen the run up. We've seen the run up close to 70,000. Now the pullback to below 60. It's all par for the course for Bitcoin. This is sort of the levels that we have been at for the last couple of, you know, months. So really, you know, Bitcoin's struggling for momentum, and that I think is the big story. It's not getting the buy-in, but at the same time, nobody wants to say, you know, I'm going to short this.
Okay, and a lot of people talk. Good morning to you, Eddie. A lot of people talk about whether cryptocurrencies have inflation-fighting credentials, whether they're good at protecting you. So that takes me on to a conversation about where we are on inflation right now. And I know on the Markets Live team, you've been thinking a lot about different indicators, the Baltic Dry, the container rates. If you put those together on a chart, you see that both of them are coming off recent highs. Does this tell us something about a turn in inflation?
So I think, you know, supply chains and supply chain disruption was very much a part of the early story in inflation, right? And we are seeing those pressures come off. Now, look, no doubt about it, Baltic Dry and the container rates and so on, they are still very elevated. But for them to continue fueling inflation, they have to continue going up at a, almost parabolically, because they have to continue rising at the same rate over and over and over to keep fueling the inflation. And we're just not seeing that at the moment. Now, that's not enough to take the bite out of inflation that we've seen so far, because we're seeing a little bit of this thing coming through via the jobs market at the moment. And so that's the big question, whether the easing of supply chain disruption comes too late.
Okay, yeah, if we see that easing, will it be too late? And we've already seen an impact in wages. Thank you very much, Eddie, Bloomberg's Markets Live. Eddie Vandervelt joining us here on set in London. And for more market analysis, check out MLIV Go on your terminal. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that as either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
You finally got your taste of MIT, so why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation. And we believe that the quarter three was the quarter that was most affected. Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie alongside Anna Edwards here in London and Matt Miller in New York. Let's get the first word news. A key Senate Democrat has been told to expect an imminent decision on President Biden's pick to chair the Federal Reserve. Senate Banking Committee Chairman Sherrod Brown says he assumes the decision already has been made. The president has interviewed current Fed Chair Jerome Powell and Fed Governor Nell Brainard for the top job. Powell's term ends in February. In the UK, the labour market strengthened after the government's benefit programme for those out of work in the pandemic came to an end. Companies added 160,000 people to their payrolls last month. Meanwhile, job openings surged to a record high. That all bolsters the case for the Bank of England to raise interest rates as soon as next month. And in Germany, the number of daily COVID deaths has risen the most in more than 5 months. Authorities reported 265 deaths today. Meanwhile, cases over the past 7 days hit a record. Lawmakers in the new coalition government plan to introduce legislation that would impose tougher curbs on people who have not been vaccinated. And the German government has temporarily suspended the certification process for the Nord Stream 2 pipeline. That sent European gas prices up as much as 12%. The move came as the pipeline's operator decided to set up a subsidiary to meet EU requirements. Plenty more ahead. Stay with us. This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力的，都有的啊，但是要看怎么一个结局。说我们不做任何挑衅啊，但是说把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
China has, I've spoken with Xi about Taiwan. We agree we will abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Matt Miller in New York. Kaylee Lyons is off this week. And Tom, really interesting to think about what we've learned about geopolitics overnight. We've had, of course, Presidents Biden and Xi both meeting, and the potential for a lot of market-moving news. We got a little bit of movement in the Chinese currency, didn't we? I was just looking at the chart, and we did see some strength on that offshore yuan, but it's all been unwound since for a few minutes, Matt says. And now we've got dollar strength. So, I mean, it was short-lived, at least the market reaction in the short term.
Trying to put guardrails around the relationship. 638 for the offshore currency. It's been relatively stable this year, despite the fluctuations in this relationship between Biden and Xi and the two teams there. The other thing to notice, and this is a bit of an idiosyncratic story, but in terms of Chinese tech, we had a lot of focus on that in the last few months. A bit of upside. There's some reporting that maybe gaming apps are going to start to be re-released in China. So you see some upside in Chinese tech earlier today in the Asian session. That could filter through to the eddy yards like NetEase and Baidu as well.
Okay, so that's the story around Chinese tech. US futures point to the downside, but not by much.
No, I mean, if we want to try and talk up market moves where there aren't any, let's look at U.S. futures right now. Down about 0.1%. In fact, stocks in Europe are actually up more than futures are down. About a 0.25% gain on the stocks Europe 600. Right now, the 10-year yield coming down just under 160 at 159.74. And Bitcoin, this is a real move now, 7% and change. Of course, that's what we expect from the cryptocurrency at $59,222. So back under 60,000 after hitting 68,000 just a couple of weeks ago, 68,000 and change. I will say that we also see big moves in other commodities, if you consider Bitcoin a commodity rather than a currency. So nat gas, we've been talking about, and we'll continue to cover that as the Nord Stream 2 permitting gets stopped for a moment. Let's take a look at some of the pre-market movers here in the U.S. Lucid, I was pointing out earlier, the electric car maker run by Peter Rawlinson. He says they will be able to make 20,000 units next year. Of course, they've got orders for far more than that. So if you're on the waiting list, if you're just signing up now, you're going to have to wait 2 or 3 years till you get a Lucid vehicle at least. Coinbase coming off in the pre-market, 6%. This is really a function of what's been happening with Bitcoin. Although Coinbase was gaining the last couple of days, it's given up those gains today. And Boeing in the pre-market down 0.5%, but it was up yesterday more than 5%. Its best gain since March on good news for the Dreamliner, getting it back on track for production, and the 737 MAX getting it recertified in China. Bloomberg Business Week has a story today reminding investors about the difficult times for the 737 MAX and how Boeing just couldn't seem to get it right for a long time. And hopefully that's changed now, but this will be a little bit of a sell-off after the big gains that we saw yesterday. Anna, what are you watching?
I don't think I've been on a plane for more than 2 years. Going to have to fix that soon. I'm watching, Matt, to answer your question, weakness in the euro. The euro extending its drop against the dollar as European data falls behind the US. And for those listening on radio, just to explain what I'm looking at here, a chart of the euro falling, yes, but also a chart of city economic surprises. And this is the Eurozone US spread. And it basically shows that the surprises are coming more negative in the European area than they are in the United States. And I wonder, from a global perspective, when you're looking to allocate to regardless of asset class, essentially, how much this is complicating things or throwing up opportunities. Madeline Jones, Portfolio Manager for European Credit at Oaktree Capital, joins us. Good morning to you, Madeline, and we can talk about all kinds of angles on the European credit story, but I wanted to start with the FX angle. How much is the weakness in the euro playing in as something that international investors want to talk to you about when you pitch European credit?
Yeah, it's one of many factors. Frankly speaking, right now, there is a lot of discussion about the distinctions between US and Europe. I have the great privilege of working with my US portfolio manager team in high yield in the US and in loans in the US. We talk on a daily, regular basis about the difference between the two markets. We're looking at credit fundamentals. We're looking at other elements which drive the asset prices, whether that's, the interest rate environment and the differentials that may be coming down the pipe between the US and Europe. And we're talking about idiosyncratic elements, the technicals of the two markets. So FX plays its role in that discussion, but we can take those three elements apart where we see credit fundamentals on either side of the pond. They look, very robust. We are credit managers. We're looking at balance sheets. We're looking at liquidity. We're looking at cash flow. And we're looking at a company's ability to service its debt. And we see lots of opportunities either side of the pond to invest in. But then when we start to get into, yeah, please.
You have also the pleasure, I guess, of working with investing legend Howard Marks at Oaktree. And he recently said that they're going to get more involved in China, working with a lot of those developers there. Now, of course, that's not in your remit. You're focused on European credit. But can you de-link German corporate credit, for example, from China? That market is so important to Europe, isn't it?
Absolutely. Oh, it absolutely is. European credit is a very outwardly facing market. So what happens in the broader global environment is extremely important. And that's where we have to factor, in our understanding of individual companies and how exposed they are to places like Europe, and make adjustments and China, make adjustments accordingly if we feel that that is a risk or an inappropriately compensated risk that we don't want to take in our portfolio. So you're right, there is a global context here which impacts all of our decision making.
Madeline, how do you think about the robustness of corporate balance sheets amid these higher energy costs, supply chain constraints in Europe? If those sustain, where do you expect the vulnerabilities to start to be most pronounced?
Yeah, this is something that our analysts across the firm are drilling down on a daily basis, speaking to CFOs, speaking to CEOs, make sure we get a granular read-through of where the pressure points is. We could talk top-down sectors. We could say clearly manufacturing, autos, commodity chemicals. These feel like the hot spots where you're going to face that pressure, that inflation, that supply chain issue. But you've got to peel it back another layer. You've got to look at their own end markets. You take autos, for example. Good OEMs have made shifts to compensate for pressure on their profitability by moving up the curve. Their consumer base has pent-up demand. They can pass through prices. They can shift their consumer to higher revenue, higher margin vehicles and compensate that way. So you've got to peel it back to real granular assessment.
And real granular assessments of whether any individual business, as you point out, has that pricing power. Where do you stand on the overall rates environment for the Eurozone? Because the conversation in the Eurozone has been very much one of the markets running away with themselves, thinking that we're going to get rate rises, and then the ECB really pushing back, saying it's very unlikely we get that kind of move next year. What are your base assumptions?
That is the narrative, and that is the perceived wisdom of the market, is that the ECB are going to be slower in shifting on their accommodative monetary policy. But as you point out, we work in a firm where Howard Marks is our guiding light and points us to the fact that you cannot predict central bank movements. There is good reason to think the inflation environment in Europe may be less pressured than the US, but we cannot make decisions on credit fundamental basis on things we cannot know about central bank policy making decision shifting.
Madeline, I want to get back to the automakers, as will surprise no one. You mentioned the OEMs and their investment, the pricing power they have. What do you think about a Volkswagen or a BMW as a challenger to Tesla?
Yeah, I think you've got to look at companies in the broader spectrum and feel as though they have the positioning to target across the audience, and that shift to electric vehicles, that has been something that's weighed on our judgment of the sector for many years now, pre-COVID. So you have to look at each company, how it's positioned, how it can finance that shift to respond to the impending demand of electric vehicles. It's very critical to get that right.
Okay, Madeline, thank you. Thanks for spending time with us this morning. Madeline Jones, Portfolio Manager for European Credit at Oaktree Capital. Coming up on this program on US-China relations, we'll be back to that top geopolitical story of the morning. Michael Herson, Head of China and Northeast Asia at Eurasia Group, will join us. What did we learn from that bilateral summit? What progress can we look ahead to, perhaps? This is Bloomberg.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did
I
he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London. Matt Miller is with us, of course, in New York. Now, Presidents Biden and China's Xi Jinping spoke of the need for cooperation in their first virtual summit. The video conference lasted longer than expected, but the two leaders announced no major breakthroughs. They discussed a wide range of issues, including trade, the status of Taiwan, and human rights. Michael Herson, who leads Eurasia Group's coverage of China and Northeast Asia, joins us now. Michael, good to speak to you. And I suppose one of the things, and this is a theme that we were looking at during the COP26 talks in Glasgow as well, the fact that China and the US are talking is actually from the very, from a very low expectations level perhaps we've come from, that seems to be something of a positive. We've seen them talk about the things they can cooperate on, the things where they have common interests, such as climate change. What were the positives that you took away from today?
I think it's just that. We're starting from a pretty low baseline and really a series of very frosty exchanges between the two sides and some serious saber rattling over, flashpoints like Taiwan. So the fact that they had this discussion, the fact that the tone clearly was positive, I think is certainly helpful. It's just important to keep in mind, really the goal of this meeting, at least from the US side, was to manage risks. I think the opportunity for major progress in the key issues in the relationship, I think, is going to be quite difficult. But this is about avoiding an accident, avoiding stumbling into a crisis.
Michael, to what extent is trade an area where the two sides could make some progress? We've been hearing from Larry Summers, for example, suggesting that if you remove tariffs, that could ease some of the inflationary pressures in the US. Is there an incentive for the Biden administration to make moves on that front?
I think trade is got some more potential room for cooperation because of inflation concerns than it did, say, 3 months ago. It potentially would have an inflationary impact. That is an argument that some within the administration are making. You've heard Treasury Secretary Yellen make this case in public. I still think that it would be a risk, a political risk for the Biden team to lower tariffs because of the inflationary dynamic, because they would risk really being painted as soft on China and not protecting U.S. workers by Republicans. And so, you know, there is a potential there. We'll have to see what comes. But I think, you know, my base case for the time being is that this still seems unlikely.
The domestic politics in China typically are notoriously difficult to read, but we do have the Party Congress next year. It's very likely Xi Jinping will go for a third term. We had the plenum. That domestic environment for Xi Jinping, does it strengthen his hand to go harder on these issues, or does it give him the confidence to be able to walk back, take a step back without losing face?
I think Xi, generally speaking, is in a position of strength when it comes to his interactions with Biden and how he handles the U.S. relationship. What he seeks really is a balancing act. He also has strong incentives not to have this relationship slip into a crisis, for example, over an issue like Taiwan. Xi has, I think, a third term clearly locked up at the Party Congress next year, but you certainly don't want a crisis like that to potentially derail his hopes. At the same time, he's got incentives to remain tough, to show that he is standing up to, you know, what many in China regard as U.S. bullying, and to safeguard China's interests in areas like Taiwan.
Yeah, speaking of staying tough, Michael, I saw when President Biden was signing the infrastructure bill yesterday, he struck a really different tone, saying, you know, basically, let's go. We got to beat China. We can't let them catch up to us. Obviously, he's playing to his base in that sense and also trying to rally more spending on his economic agenda. But is it really a zero-sum game? I mean, have we all decided that's how it's going to go?
I don't think it's zero-sum, but the opportunities for cooperation, you know, have become substantially less, substantially more limited as this has become an increasingly intense and increasingly broad rivalry between the two sides. You know, I mean, I think you make a good point. What President Biden is trying to do is say, look, we can have competition with China. We can do all these things to build coalitions to counter Beijing's influence, but we can do this in a way that manages the tensions. From the Chinese side, you know, the aspect of managing tension sounds good, but all the rest of it they still have a problem with, including, you know, the U.S. looking to build coalitions to counter China's influence, pushing back on China on human rights, on foreign policy, on trade issues. So I think there is, you know, an effort by the two sides to put a floor under the relationship here, but the ceiling, if you will, also remains pretty low in terms of opportunities for major progress.
Michael, thanks very much for your thoughts. Michael Herson, China and Northeast Asia practice head at Eurasia Group. Back to some breaking news. And Matt, we were talking about this a little bit earlier on. The German regulator confirming that the decision that's been made around Nord Stream 2 will delay the start of Nord Stream 2. We were discussing how the process for approval of this pipeline between Russia and Germany, how that process had been put on hold. We were talking about whether it seemed procedural. It still caused a 12% jump in the session price of Dutch natural gas, one of the benchmarks here in Europe. But procedural or not, if it delays things, it delays things, Matt.
Yeah, I mean, let me tell you, I moved into Berlin 5 years ago, and my street was under construction. And as I flew back to New York a few weeks ago, the street was still under construction. So this won't be the first time German bureaucracy has delayed something. It is, though, only a procedural move, right? Nord Stream 2 had to move ownership of the pipeline to a subsidiary to satisfy EU regulations. And now that it's done that, it's got to move all of its assets and its human resources, its employees, et cetera, to the subsidiary as well to satisfy German regulations. So it's just the kind of delay that Putin doesn't like to see, and he's pushed for them to certify the pipeline faster. But, you know, and Mr. Market's bidding up the prices, but this is just how it works.
Yes. Yeah, absolutely. Something, as you say, that President Putin of Russia has been pushing to move quicker and now seems to be moving slower. Coming up this week, the 4th annual Bloomberg New Economy Forum kicks off in Singapore. We'll be speaking with world leaders across a range of subjects, including finance, trade, climate, cities, and health. I'm sure inflation and energy prices will also get a mention. It all starts Wednesday on Bloomberg TV and at Live Go on the terminal. This is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
into
up.
Weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think they have made a mistake in the sense of being so slow to start the taper. They basically said we're not going to start the taper until we've made substantial progress towards these goals of employment and inflation. And now the taper isn't going to be completed until June of next year on the current trajectory. That's a very slow path of removal of accommodation given the economic information that we're seeing. So I think by locking themselves in this way, I think they've doubled down on being late.
I can't predict the future any better than Bill Dudley can. And, we'll see what the economy requires, and the Federal Reserve will adjust monetary policy to achieve our dual mandate, as we've all committed to doing. And so is the federal funds rate going to end up at 2% or 3%? I don't know, and neither does Bill Dudley. We'll have to see how things actually unfold.
And that was Minneapolis Fed President Neil Kashkari and former New York Fed President Bill Dudley talking yesterday on Bloomberg. We also heard from Ohio Senator Sherrod Brown that a new Fed chair is imminent, and of course he is running the Senate Banking Committee, so he's someone to listen to, but he cites the White House. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now to talk about how all this affects markets. Tom, does it matter if it's Brainerd or Powell?
We go through this, every 10 years, every 12 years. I went back and actually looked, Matt Miller, at George Bush, I believe the senior, and Alan Greenspan. I guess that's not much different, except now it's such a polarized Washington. I read the Sherrod Brown article carefully. I guess there's some pushback from the White House. It may not be immediate in today. I don't know. The experts we talk to say it's really not that big a monetary deal, but the symbolism here is immense.
Right, the symbolism. Good morning, Tom. And I know that you're going to be speaking to Fed officials today. You'll be speaking to St. Louis Fed President James Bullard. Yeah. Of course, I'm sure you'll ask him about the leadership. He might or might not choose to weigh in on that. But what will you be looking to get from him, given what we know about how high inflation has got in the U.S. and how much the Fed, as we've said, needs to hold its nerve or not through the winter? Well,
the good news is Michael McKee's going to sit in with us and ask and lead that interview, and that's a good and beautiful thing. But what I would suggest with James Bullard is he owns the phrase regime change. And I really want to talk to him if this is a regime change or are we at a point where it's not a regime change, and we'll have to see.
Okay, Tom Keene, co-anchor of Bloomberg Surveillance. Thank you. Make sure you tune in for that, of course. Now, look at what we are watching. What else is on the agenda? I'm watching the spike in COVID, Anna, Matt, in Germany. It is now at record levels. In terms of infections, record levels, deaths of 265. That is grim news, of course, but the policy was what we're watching, and whether or not they enact restrictions on the unvaccinated, copying the playbook from Australia. It's pretty fascinating, the steps that the authorities across Europe are looking at now.
Yeah, copying the playbook from Austria, I assume. Well, maybe Australia has those unvaccinated lockdowns.
Austria. I said Australia. I apologize.
As well, it's not an uncommon.
It's not Australia.
Mistake. Sweden and Switzerland is a bigger problem when you swap those two. And as Tom Keene points out, Switzerland may have to act now because it's surrounded by high COVID counts. I'm watching Nord Stream 2. Speaking of problems in Germany, their bureaucracy rears its ugly head again, at least from Vladimir Putin's perspective, and we don't get certification of this pipeline. What that means is that natural gas prices in the UK are up another 10, 11, 12%. So, when we're listening to, we heard the Indian energy minister earlier say, hey, we're still using these fossil fuels and we got to deal with higher prices. He's 100% right when it comes to nat gas, when it comes to coal, when it comes to oil today as well. So watch these commodities rise, Anna.
I'm watching equity markets. I'm watching records. I'm watching the European stocks gain to a record as risk appetite sustains the recent rally. But that's not the only record we're talking about. We're talking about a record discount to U.S. stocks as well. So the MSCI Europe Index this month hit a record of about 30% discount to its U.S. counterparts. Morgan Stanley saying that, yes, they expect volatility in 2022, but they do see 8% upside for Europe's stocks next year. Also positive vibes coming from J.P. Morgan, Goldman Sachs and Pictet. A lot of people talking about buying European stocks right now. More Bloomberg Surveillance is ahead. We'll hear from the French trade minister and, as we mentioned earlier, the St. Louis Fed president, among others. Those conversations next. This is Bloomberg.
competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
There is a gridlock between the bulls and the bears on, is inflation going to fall rapidly enough?
It seems like the 1960s and early 70s is the more apt comparison.
I think we're seeing evidence that the labor market, particularly in the United States, is pretty tight.
I do think that terminal rate has to be higher.
Stocks at the end of the day are an inflation hedge.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Here come the bulls from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market in about 0.1% on the S&P. TK Goldman overnight. 5,100 on the S&P year-end next year.
Yeah, there's no question about it. That's a reach this morning. What a disparity between Goldman Sachs and Morgan Stanley. The news flow right now, John, extraordinary. I got to be honest, John, as you open the show, I was looking at the famed Bloomberg headlines to see if we get a note from the White House. I don't see it yet.
The Senate Banking Chairman, Sherrod Brown, saying to the team here at Bloomberg, Tom, I hear it's imminent. It's imminent, apparently.
Well, we'll see if it's imminent. I don't know about that. John, I want to dovetail Home Depot's earnings into the David Kostin call at Goldman Sachs. All you need to know is I've got a top line of 6.1% comp sales versus an estimate of near 2%. That's the kind of oomph that gets you out to 5,100 SPX.
EPS at 392. The numbers out of Home Depot, Lisa, looking good.
And the key question today, really dovetailing from Home Depot into resale sales in about 2.5 hours, is can consumer demand continue to be maintained in the face of higher prices? And that is the key question that we keep getting answered with a resounding yes. But for how long, John?
Margins. Goldman, David Kostin and the team say margins can keep expanding, Lisa, through next year.
And this really is a testament to their ability to pass along costs, to cut additional costs, and basically the fact that consumers want to buy a lot of stuff. Will this stop? And a lot of people are expecting this not to. October retail sales will be very interesting to see that dynamic and parse through that.
Walmart coming up a little bit later as well, Tom. In the pre-market, Home Depot, TK, up by about 1%.
Yeah, it's a nice little lift, and we'll have to see. The transactions number looked a little shaky, but everything else was glorious. We'll go into that. And I really want to emphasize, John, with a massive reset on Tuesday, you come back from the weekend, you proofread the spelling on Monday, you release on Tuesday. We're sort of feeling that today, a really important day for global Wall Street. But Ben Laidler, who's been dead on this, reaffirms a la Kostin, a la Lori Calvasina, and the others, that this is about, John, you mentioned this yesterday, consensus. Wrong. That's what you need to know about consensus. It's been wrong.
Wasn't bullish enough, Tom.
Ben says, look, it's coming in at twice consensus, and he's out twice consensus into next year.
Put this in a headline. The Home Depot Christmas tree at Casa Ferro is up. It's up already, Tom.
Did you go with the green tinsel or the white tinsel?
Just experimented with Home Depot. Same day delivery, TK. $10. It was fantastic.
You
it worked
already
out.
have a Christmas tree
John,
up?
this is
Really?
un-American.
Tree is up.
When do you take it down, March?
Guess what, Tom? I'm English. You know,
the year is over.
John, I'm afraid to ask what you do for Thanksgiving.
We have a meal, Tom. Futures down a tenth of 1% on the S&P.
Takeout.
Yields come in a couple of basis points on 10s. 159, it's 74. What's wrong with the tree being up in the middle of November? Come on.
It's tacky.
It's tacky.
You let
It's
them
beautiful.
put the tree up at Rockefeller
It's got this
Center.
silver pearl glass theme to it. It's beautiful. It's very classy.
Do you have the little light that rotates at the bottom, John?
No. They're fixed lights, about 1,000 lights on a 7.5-foot tree. It's very impressive. Euro dollar 113.61. Crude Lisa 81.24.
Well, a lot of people,
0.4%.
a lot of people in the retail world hope that everybody is just like you, John, and is buying their Christmas trees and the presents to go under them early, and will continue to do so in robust fashion. 8:30 a.m. we get U.S. October retail sales. The expectation is for it to be robust, for it to climb despite the higher prices. But this really is the question: how much are we seeing some of the issues that we're seeing affecting consumer sentiment bleed into what they actually do with their money? 10 a.m. we also get September business inventories. Remember that companies are building up their stores so that they can have enough goods for the Christmas season, for John Farrow's Christmas tree, as well as the NAHB Housing Market Index. I am particularly curious about the home builder sentiment at a time when you do have higher input costs, and they are trying to cater to the lower income bracket. Remember that a lot of the entry-level homeowners want to get in and cannot because the prices are just too high. How are home builders dealing with this? How is that affecting sentiment? And then at 2:25 p.m., it's very specific. President Biden is planning to speak on the bipartisan infrastructure law from New Hampshire. Welcome the ongoing advertisements to try to get a message across that this was a huge success. Just to give you a sense, though, of what the spending looked like in this bill that was passed yesterday. For roads and bridges, $110 billion. For high-speed internet, $65 billion. I thought it was interesting that power grid implementations get $65 billion. How much does this have to do, John, with the adaptation to the electric vehicle craze and supporting that as we try to move to a less carbon-intensive economy?
Lisa, thank you. I'm just staring at this news feed, Tom, waiting for this headline to drop, and I have no idea when this headline
Farrell
comes.
launches Christmas tree before
Something like that, yeah. A big red headline. A big red headline about that. I'm sure Patrick Palfrey does as well.
Lyle Brainerd and Jerome Powell do not have their trees
do they not?
up,
We
John.
can ask them. We can ask them if one of them gets another
we'll
term
ask
or perhaps a
Bullard
first
today as
term.
well.
From Credit Suisse, Patrick Palfrey. Patrick, I won't ask you if your Christmas tree's up. You came out with a year-ahead forecast, the call on the S&P 500 back in August of 5K on the S&P year-end 2022. What are the reasons to be bullish going into next year, Patrick?
Well, good morning. And no, I don't have my Christmas tree up yet, but I think it'll probably be in a couple of days. I think as I look out over the next 12 to even 15 months, really what we see is a backdrop that's been continued to be driven by corporate profits. And I think that's uncomfortable for investors with valuations at these levels. They expect the market to be expensive and they expect that to be a headwind. But in reality, what we see is since last year, all of the success of the S&P 500's advance has come from corporate profit improvement. So this isn't a multiple expansion story. And in many ways, multiples are flat to slightly down, depending on the time frame that you pick. So we still see the corporate profit backdrop as very, very favorable. And I think that's ultimately going to support the market's continued advance from here.
Patrick, take your quantitative work, factor analysis across the different sectors. You guys nailed it with a barbell call in this market, you know, some value, but also tech as well. Do you maintain a barbell strategy across sectors, or do you go more discrete next year?
Well, we really continue to love those cyclical sectors. So energy, materials, industrials, and to a lesser degree, financials. Those are the areas where the backdrop remains quite strong for a lot of what they sell. And we see valuations at really decade level cheapness relative to their own history and relative to a lot of other alternatives out there. So valuations aren't a problem for the market. And within those groups specifically, we see incredible opportunities from a valuation perspective for a lot of those names.
Patrick, what kind of interest rate backdrop are you basically basing a lot of your estimates on in order to get the kind of returns you're expecting next year in stocks?
So we expect interest rates to continue to incrementally move higher from here. I don't know if we've seen the peak so far in this cycle. at around 175 from where we were, 12 to 18 months ago. But I expect that we continue to grind higher. And really what that's going to reflect is economic optimism. And that's really why we think a lot of these cyclical groups work, is at the end of the day, cyclical optimism is going to drive success for a lot of these groups. And that's really where we expect that trend to go.
Patrick, just want to build on this commentary coming out of Goldman. Here's the quote. Companies have consistently expanded profit margins despite input cost pressures and supply chain challenges. We expect profit margins will rise by another 40 basis points in 2022 before declining in 2023 due to corporate tax reform. Patrick, talk to me about what you think is going to happen with tax reform and what it means for the earnings of some of these companies.
Well, we agree with David's assessment that we think margins are going to continue to grind higher. And it really comes down to pricing power, and it comes down to fixed cost leverage. So both of those are going to allow companies to continue to basically pass on costs down the chain and lever their machinery and their other equipment, which is a nice fixed cost leverage point. I think when it comes down to taxes, the discussion that we were having a few months ago was around moving to 28%. We don't necessarily think that's likely, and something around 25% as a statutory tax rate seems more likely. That's not a big headwind to the market. And in fact, we've already incorporated that number into our 2022 estimate. So, does it ding a net margin? Yes. Does that actually impact a gross margin? Definitely not. So I think it comes down to how you split it. 3% moving on the tax rate's not going to be as big of a headwind as David, I think, suggests, to cause an overall problem with the profit backdrop, though.
Patrick, get the tree up. In a couple of days, that works for me. Patrick Palfrey there of Credit Suisse. Thank you very much. What's wrong with that, Lisa?
It seems like a long time. I don't know. I mean, is it immediately taken down right afterwards? Make the most of it. Just make the most of it. All right.
6 to 8 weeks. Celebrate. Equity futures in about 1/10%.
He wants to go on vacation.
With some numbers. Home Depot, third quarter comp sales plus 6.1%. Yeah. The estimate plus 1.49. TK EPS 392. The estimate 339. The numbers look good.
John, what I like about this, and Steve Sadoff did this yesterday, the giant of Saks Fifth Avenue now at MasterCard, is you go pre-pandemic and compare it to where we are now, or maybe the view forward. Home Depot with an odd January year end. So this is pre-pandemic out to the guesstimate for January of 2022. And the guesstimate off the Bloomberg, John, the FA function, is up 27% on EBITDA over 24 months through a natural disaster.
Lisa, the stock up in a pre-market by 0.8%.
Yeah, look, this is all around good news. The idea that consumers still want to buy even though prices are higher. I do wonder if you strip out inflation, how much higher some of these sales figures actually would be. I mean, the idea that customer transactions actually declined during that period is notable to me. I mean, again, people are grappling with higher prices. They are sustaining them for now, but the labor market really has to catch up.
Well, investors like what they see on this name. That stock is up by almost 40% year to date, 40% gain of Home Depot year to date. This year, Tom, looking ahead, retail sales in America, 8:30 Eastern time. Lisa went through that about 10 minutes ago. Tom, that's your next big stop for this market.
Yeah, it's big, and it's bigger than it's ever been. I mean, it's 70% of the economy that gets our attention into the holiday season and all that, John. But you go to the control group, you take out all the noise, and you see where this country is.
Is it a case of watching what people do and not what they say? That's what Lisa Bramett said in the last 24 hours. Your equity market comes in about a tenth of 1% on the S&P.
And bought gifts.
That's what you did.
I felt good, and I put the tree up.
That's wonderful. I think that's wonderful.
Some correlation there, guys.
Did you put the Tottenham Christmas ornament on?
I haven't, no. That might come later. I need a silver star. I've got to find a silver star. That's going to go up after Thanksgiving.
Surveillance road trip.
Yields down.
You're so domestic.
159.91 on 10s from a beautiful New York. This is Bloomberg.
With the First World News, I'm Rishka Gupta. President Biden and China's Xi Jinping spoke of the need for cooperation in their first virtual summit. The video conference lasted longer than expected, more than 3 hours, but the two leaders announced no major breakthroughs. They discussed a wide range of issues, including trade, the status of Taiwan, and human rights. A key Senate Democrat has been told to expect an imminent decision on President Biden's pick to chair the Federal Reserve. Senate Banking Committee Chairman Sherrod Brown says he assumes the decision already has been made. The president has interviewed current Fed Chair Jerome Powell and Fed Governor Lael Brainard for the top job. Powell's term ends in February. It's another hurdle for Russia's controversial Nord Stream 2 natural gas pipeline. Germany has halted the certification process needed before the link with Russia can start operating. The move comes as the pipeline's operator has decided to set up a German subsidiary in a bid to meet EU requirements. Germany's announcement sent European gas prices up as much as 12%. And in the UK, the labour market strengthened after the government's benefit programme for those out of work in the pandemic came to an end. Companies added 160,000 people to their payrolls last month. Meanwhile, job openings surged to a record high. That all bolsters the case for the Bank of England to raise interest rates as soon as next month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
City.
Here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I think they have made a mistake in the sense of being so slow to start the taper. I think they're going to go, start probably after June, June or a little bit later, and then they're going to go faster than what people think. I certainly expect the peak to be well above the 1 3/4% that's currently priced into financial markets. Probably 3 to 4.
The federal funds rate can end up at 2% or 3%. I don't know, and neither does Bill Dudley. We'll have to see how things actually unfold.
The current Minneapolis Fed president responding to the former New York Fed president from New York City this morning. Good morning. Tom Keene, Lisa Abramowitz and Jonathan Ferro. Your equity market in 4 on the S&P, a -0.1%. Yields in about a basis point to 159.91. This morning, it's all about retail sales, 8:30 Eastern time, and some retail earnings too. Walmart a little bit later. Home Depot already out. The numbers a bit better than expected, a whole lot better than expected. Yeah. The stock, Tom, after a 40% gain year to date, is a little bit softer in the pre-market, -0.4%.
Yeah, they'll do a conference call, and there'll be more like this. As you mentioned, John, Walmart comes out here at some point. I do want to mention, John, dollar stronger here is not a small idea. Turkey is the basket case, having a rough morning out to 110.25, John. This is truly uncharted territory for Mr. Erdogan.
Looking at sterling too, Tom, this morning, back to 134.34. The governor of the Bank of England sounding like he might hike interest rates again. And I say this with a smile, Tom. I say this with a smile because of the experience of the last month.
Well, we'll have to see. What I know for certain as we talk about John Ferro putting the tree up far too early is Joe Matthew and I, one cold evening, shared the tree unveiling at the Prudential Center in Boston, where it was 24 degrees below zero, and we were there because we had to be. Joe Matthew joins us, encyclopedic, on the rough and tumble New England politics. Joe, you're in Washington. How rough and tumble is it right now for the president of the United States?
Well, for starters, they are putting the Christmas tree up directly across the street from the Bloomberg Bureau, so we're just trying to keep up with Mr. Ferro this morning. But rough and tumble will bring the president to the North Country of New Hampshire today, Woodstock, New Hampshire, where Joe Biden's going to make the case for this reconciliation bill that Speaker Nancy Pelosi has promised progressives that will get a vote this week. We're just wondering if that's going to be something around Saturday, Sunday, or maybe it bleeds into next week, because we're waiting for the scoring. We're putting our green visors on here, waiting for the CBO, which is working around the clock to tell us if this thing is paid for or not.
As you know, Joe, I've got an immense respect for what CBO does. I'm sure they're going to deliver out 10, 20, 40 pages of chiseled. Do they actually read it? I mean, how do they receive in that document from neutral authorities?
It's actually a fascinating process, and they are all hands on deck right now. Imagine if we were preparing for a massive, maybe election night coverage where all the reporters get in a big room, they all get their marching orders, and they go. The good news is they have already started the scoring. They've been working on this for weeks, actually, as different components come out from committees, but they are still waiting for quite a bit of this bill to arrive, and there are going to be likely some overnights while they get this done. Speaker Pelosi made 2 promises, one to progressives, we'll give you a vote the week of November 15th, here we are. Also promised moderates, though, that CBO score would be here, and we don't think we're going to see it likely till Thursday or Friday, and there is a great concern that it's going to show this bill is actually not totally paid for.
Joe, I gotta say, as this drags on, the narrative has moved on. We are now focused on inflation. I hear very few people talking about additional spending and any likelihood that it will actually get passed. Are the Democrats too late to get anything done this year further?
It's entirely possible. Look, the holidays can be a motivator, but while we sit here talking about the different granular details of what might be in this bill and whether it's completely paid for or not, this goes to the Senate where it's going to be dismantled. And the House has to realize, leaders have to realize, that bill is going to come back in a very different form right now. So leaning into this vote and just getting it across to the other chamber, I think would be considered progress, remembering that on December 3rd, they still have deadlines on government funding, likely to be kicked down the road a couple of months, and the debt ceiling. And Democrats to this day say they're not going to put that in the reconciliation bill. So it's not just the social spending we're talking about. It's other very important matters, including a potential default, the same story we've been talking about for months.
Meanwhile, Joe, talking about being being late. We're talking still about a Fed chair nomination that has not happened. Now we're talking about the potential imminence of some sort of announcement. What does it say that we're talking about maybe getting some tea leaves about perhaps who could potentially be nominated for a seat when there has to be somebody there by February?
Well, it says we're getting bored of reading the same news here and getting bored of waiting. It's kind of like we're making such a big deal over the fact that this meeting with President Xi went over 3 hours. How about the meat? Where's the substance? I will say the White House has been consistent behind the scenes talking about an announcement by Thanksgiving. Maybe you consider that imminent, although with some people putting up Christmas trees right now, I don't know if everyone has the patience for that.
Joe, it's a New England question. It's a Boston question, and maybe it goes back to JFK and RFK, but it is noted that the highly qualified husband of Governor Brainerd is within the Biden administration in a capacity, and of course has had a really distinguished academic and military presence in Democratic Party politics for years. Is that an issue? Is it a distinction that her husband is in the administration, a la Bobby Kennedy?
I don't think so. It's not something that's certainly getting a lot of talk in Washington, though it's a footnote in a lot of stories that you read about it. Certainly if you read the Terminal, this is something that you're aware of. But I think the politics behind this, the progressive approach versus a president here who's trying to cling on to the center as we head into these midterms is a much more important factor in making that decision.
Joe, good to catch up. As always, Joe Matthew there. Looking forward to Sound On a little bit later. Bloomberg Radio, weekdays at 5 p.m. Eastern. We'll do that again at 5 p.m. Eastern today. These were the words of Senate Banking Chairman Sherrod Brown. I'll read you the quote. I hear it's imminent. I'm not going to speculate who I think it might be now. I assume the decision's been made and they haven't announced it, but I don't even know that. So, Tom, it seems that on the Hill, at least, not many people know much at all.
That's been the tradition. I would suggest, John, that presidents back have really kept this close to the vest. It's a very important and delicate, it's a very discreet decision by the president, John, and it's always been that way. It goes back to the hallmark of Fed independence with McChesney Martin, the uproar in 1965 with LBJ, and then on to the Greenspan tenure and frankly, on from that, John, it's sort of business as usual. But, John, I do take your point. This time is different.
Lisa?
It's more politicized.
It's politicized, and we have to wait a little bit longer.
Honestly, that rhetoric to me indicates the back-channel conversations that must have been had. Senator Sherrod Brown, I'm sure, called the White House and said, what are you guys waiting for? Seriously, what is the latest?
Good point, Lisa.
And they probably were saying, it's coming, it's imminent. And so that's what leads to the sense of sort of knowing something, but not really knowing anything. Everybody wants to understand what the delay is. I think that is the takeaway from these comments.
We could all make this comment, couldn't we?
Yeah.
I assume the decision's been made and they haven't announced it, but I don't even know that.
No, you misunderstood. No, we're not getting a fake tree. Okay, I'm on air. I got to go. Bye.
They want a tree already too, Tom.
Yeah, that was afterthought. She's like, we're not getting a fake tree.
What's wrong with a fake tree? You know, I used to be against it too. Light a candle that smells like a Christmas tree.
John,
get on with it.
John,
have a breeze machine.
Want a real tree.
The dogs want a real tree.
Dogs want a real tree.
Do you want to tell them the story, Tom, about what you do with your Christmas tree? TK buys the tree and leaves it in a corner in the living room.
It ages.
Up until 2 days before Christmas.
It ages. Like, December 23rd, we get out the ornaments. There's
I remember the one year where it wasn't even decorated.
John, one year we did all Boston Red Sox ornaments. It was great.
I remember. Tom Keene, Lisa Bramis, Jonathan Ferro. Coming up a little bit later, Kit Juice of SocGen from New York. Futures just slightly negative. This is Bloomberg.
much stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked of other things. Now that's moving to become mandatory.
You finally got your taste of MIT, so why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
Live from New York City on Bloomberg Radio and TV. Good morning to you all. Here is the morning price action. Equity futures just slightly negative, 0.04% lower. On the S&P 500, in at around 4,700, and Goldman Sachs looking for 5,100 year-end next year. They are bullish. We can talk more about that call through the program. They're expecting margins to keep growing, even as cost pressure continues rising. At the front end of the yield curve, this is what it means. Switch on the board and get to the bond market, 2s, 10s, and 30s. We're starting to think about rate hikes again. So the front end of the yield curve, 2s, the yield near the height of the year, 51 basis points on 2s. But that front end of the yield curve was whipsawed in the last month, not by the Federal Reserve, but by the Bank of England and Governor Bailey. Governor Bailey, incidentally, in the last 24 hours, saying he's increasingly uneasy with the inflation profile. How's the labour market doing after the UK support programme for the labour market rolled over, closed off? The labour market is doing okay in the UK so far. So switch on the board and get to cable. That's the one I want to look at in the FX market. Sterling just a little bit stronger. The pound against the US dollar, 134.43 anytime. Positive 0.2%. And Tom, once again, we're having the conversation. Will Governor Bailey and this Bank of England hike interest rates next month?
Yeah, give us some color on that, John, before we get to Kit Jukes here. I mean, how unusual is it for them to drive the conversation? There's some people upset by this.
Every statement apparently is conditional. We understand that. No statement, of course, is unconditional. Tom, the fact of the matter is the market focuses on the emphasis, and it was clear where the emphasis was on the communication of the Bank of England through the whole month of October into that November decision. They're blaming the market. Some people agree with them. They're doing it again, Tom. They're teeing us up for a move, potentially, in the middle of next month.
We welcome all of you on radio and television. We're on the watch for headlines out of the White House for a new Fed chairman. It may be Powell, maybe Brainerd, maybe it'll be Kit Jukes. He joins us now, Chief Foreign Exchange Strategist at SocGen. And Kit, usually a broad conversation, but with your morning note and with dollar dynamics, I need to go right now to the ramifications of this new dollar strength. What is the significance of euro right through 114 down to a weaker 113 handle?
Well, we've accelerated. We went down through 114 much faster than we went through 115. Yes. Positioning is still light, so there's a danger that this accelerates on the downside. There's an Armageddon case for anybody out there if this catches on more broadly, because a super strong dollar is not good for the world. By and large, it'll end up tightening global monetary conditions. The people that have helped the world out to a significant degree as other currencies have weakened have been the Chinese, without doubt. So when the euro was really strong back in 2018, dollar yuan was as low as it is now, and the Chinese turned it around and sent it back the other way, and that eventually forced the Fed to stop a hiking cycle. Now, at the moment, the Chinese are doing everybody a favor, so it's fine, and we can all just buy the dollar against other stuff.
The distinction here is a unique U.S. fiscal policy. How does that trillions of dollar policy play in Manila? How does it play in Warsaw, where we just saw Bloomberg headlines on Poland upset at their dynamics? How does that singular fiscal impulse play?
It just provides extraordinary demand for goods from around the world, Tom. I mean, in the sense that, so here in the UK, we had a furlough scheme that kept people employed and you know, allowed employers to keep their staff on even when there wasn't much work. In the United States, folks were handed a check. That check burned holes in pockets as soon as the outlook improved, and we can see that in what we call supply chain difficulties, and some people call just really, really, really strong demand. And we've got the retail sales numbers coming down the pipe in a few hours' time to show us just where the latest is on that. And I think that's the big difference.
Kit, you mentioned the UK. Let's talk about it, and let's start here. Whose fault was it in the last month? The markets or the communication coming out of the Bank of England?
It's always a bit of both, to be honest, John. But, you know, I don't understand why we had to have unscheduled speeches that came out sounding very aggressive, even if you say the caveat was always there. They didn't have enough information to hike in November because they hadn't seen this morning's labor market data that show or give a glimpse, the first glimpse, of what happened when the furlough scheme ends. So that, you know, there was a strong case for the Bank of England to be saying, look, we're waiting to see what happens after furlough ends. We want to know what the state of the labor market is. They chose not to do that. I put some blame on them. And then, of course, we got overexcited in markets because we're those kind of people, really. That's just what we do.
That's what we do, Kit. So how credible is the latest communication from Threadneedle Street, the last 24 hours? How credible is that communication?
Well, that's just a series of people giving their individual positions when they were in front of the Treasury and Civil Service Select Committee, so they had to. But what's credible is we've seen the data. The UK has now got, from that set of data, about 230,000 more people in jobs than it had before the pandemic started. That's pretty good. We have quite a lot of price pressures, and in weighing the price pressures against the state of the economy, the needle moved in favor of the hawks on the MPC. There are more of them. Bailey seems to be one of them. And the chances that they get their way in December, I think, are pretty high now.
There's a broader point here, Kit, especially at the muted reaction in FX markets. How efficient are foreign exchange markets in pricing in differentials and central bank policies internationally at this point, given the other inputs, growth in particular?
Well, you know, I mean, FX is never supposed to be just a bland reaction to interest rate differentials. So you have to take a sort of a more, if you like, holistic view. If we raise rates a lot because our growth inflation trade-off has deteriorated after Brexit, so that we have bigger supply chain impairment than other countries, we'll end up with higher rates, but an economy that weakens more. I don't know that that makes me like a currency as much as the US dollar, for example, where you'll get higher rates to tame a booming economy. One of those seems better for the currency than the other. So I think, I think at least if it's nothing else, it's a lesson that FX isn't only about rate differentials.
Kit, how much are people pricing in a scenario in which the Federal Reserve is forced to hike rates into an economy that's not booming? And this is the issue that Bank of England faces, the idea that higher prices require some sort of response, the idea that the employment market is booming. However, you do see a deceleration. How likely is that scenario?
Tail risk at the moment, but not unlikely, and it depends how long you wait. Look, one of the features of an economy that gets too hot is it does blow itself out. So if bearing in mind, if we continue to believe the Fed really can't hike until they're done tapering, and then it would be really hard to be done tapering before July at this point in time, then there is a danger that they don't get many hikes done before it becomes clear that the excess heat in the economy is destabilizing it. That's not at all impossible. I genuinely think that the argument people make that if you start raising rates too late, you have to go further, can be wrong. That if you start raising rates too late, you have just an unstable economic cycle that's very easy to tip into a dangerous place.
Kit, just a final question. Favorite currency pair to play through next year? What is it, Kit?
I think it's still short cable, to be honest, over the course of the year. I'm just going to have a really hard time over the next couple of months.
Kit Jukes, thank you, sir. Kit Jukes of SocGen. Short in cable into next year. It could be tough over the next couple of months. Let's see if they do hike interest rates next month. I can't say that, Lisa, without smiling, given the experience of the Bank of England over the last, not the last month, the last 5-10 years.
Every time you mention it, I think of Lucy holding the football.
Yes.
For Charlie Brown and just pulling it out. I mean, that's basically what this is, right?
Governor Carney did. Numbers coming out of Air France that I think might interest our audience, Tom. Air France flew 26,000 passengers during the week starting November 8th versus 13,200 the previous 7-day period. These are US-bound passengers, Tom.
Yeah.
And of course, travel reopens and they get to double their traffic.
And
those numbers look good.
Yeah, it's interesting, John, because you saw it with Singapore opening up, I believe, to India, was it yesterday or the day before as well. But then, John, I look at Matt Miller was great on this. The Germany locked the data in Austria and Switzerland is just stunning.
Yeah, they're not good.
It's really not a visible story in America, and it should be.
There's a conversation starting in the UK, Tom, we can talk about it in just a moment, whereby to be considered fully vaccinated, you might need the booster. That seems to be the direction the British government are going in, and I wonder how quickly we'll follow here in the United States.
Are the three of us, like, totally distracted by, like, looking at the headlines to see if it's Jerome or Lyle?
Just waiting. And Lisa, continue to wait, and your equity market now unchanged on the session.
I thought he was saying, are the three of us just totally distracted? Look, honestly, people are waiting to see not only who will get nominated, but also whether there will be any reaction. Is there a difference between Jerome Powell and Lael Brainerd? I don't know that I've heard a legitimate answer here because, yeah, some people say that Lael Brainerd focuses more on the employment market. She's perhaps more political. What does this administration want? A more dovish Fed or a more hawkish Fed?
Perception versus reality, I think, on this one, Lisa. I'm with you. On the latter, on the reality of it all, I've seen a governor that's been pretty consistent on the employment market for a long, long time, a chairman that's now pretty much in line with her. I don't see much daylight between the two on monetary policy. Financial regulation may be a little bit different, but perception drives markets, and perception, no doubt, will shape the confirmation proceedings as well.
The one legitimate difference that I see is that Lael Brainerd is less tested than Jerome Powell, and typically it does take a couple of months to get the communication down right. What could that potentially do in terms of increasing volatility in the first quarter of the year? That, I think, is actually legitimate, but other than that, not a lot of daylight between the two.
Changing leadership at an inflection point is a really valid point, Lisa and Tom. I think it's one that resonates with a lot of people.
Yeah, it is. I don't know. It's not like I'm bored by the whole thing. It's
you
just,
look bored. You look bored.
John, did you 100%. Buy your Christmas tree because you wanted to front-run cable weakness?
Shall I tell you why I bought it, Tom? Because there's going to be a rush to get your Christmas tree. First, it was purchased on Williams-Sonoma, Tom.
Supply chain disruptions.
And they outsourced that to a vendor. It then got backlogged and it hasn't arrived. So over the weekend, I just thought, I'm not waiting around for them. That feels like fake premium.
Okay, literally.
Williams-Sonoma. So I went to Home Depot, went on the website.
Supply chain disruptions.
Saturday morning, I was experiencing it, Lisa, in real time. Saturday morning, went on the website, found a tree I liked, went through the reviews, looked at the customer photos, looked okay, ordered it. It came in the afternoon.
I've never been in a Home
Service was
Depot.
fantastic.
That's amazing.
You can do it online, Tom. Great delivery. Great delivery.
This segment was sponsored by...
I knew that I had Home Depot earnings to work with the following week and just wanted to get a feel for the company. You've got to experience the company.
On the research.
You've got to do the research, and that's why Al paid for it.
Yeah, that's good. Redo Keeper of the Amex says thank you.
Futures unchanged on the S&P from New York City this morning. Good morning.
That's a good idea.
This is Bloomberg.
It's already done.
With the First Word News, I'm Rishka Gupta. Joe Biden and Xi Jinping appeared to accomplish as much as possible in their first summit. They agreed to keep on talking without letting tensions over Taiwan and other issues derail the U.S.-China relationship. The virtual conference lasted more than 3 hours longer than expected. Moderate House Democrats expect that official estimates may show that President Biden's tax and spending plan won't pay for itself, but they indicate that might not doom the legislation. The Congressional Budget Office projections come out by Friday. The CBO and the White House are likely to disagree on how much money can be raised from increased tax enforcement. And in Germany, the number of daily COVID deaths has risen the most in more than 5 months. Authorities reported 265 deaths today. Meanwhile, cases over the past 7 days hit a record. Lawmakers in the new coalition government plan to introduce legislation that would impose tougher curbs on people who haven't been vaccinated. And Hong Kong has defended its decision to let JP Morgan CEO Jamie Dimon skip the city's 21-day quarantine. The city's chief executive, Carrie Lam, says The bank does important business in Hong Kong, and Diamond's trip was relatively low risk. Diamond said that the city's restrictions make it harder for JP Morgan to retain their talent there. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to